Economists surveyed by Bloomberg. In addition, that business inventories are up 0.2%. Again, that's right on target. Howard Ward at Gabelli Funds, talked to him a little earlier. He says one of the big obstacles to stocks, that has been removed from the markets.
The big boogeyman during this whole decline in the market over the last year and a half was concerns about inflation and rates. Well, I think inflation has largely been slayed. It's en route to being diminished, to get back down to 2%.
Traders, meantime, betting the Fed's going to resume its tightening cycle next week. Is the Fed meeting with a second with a quarter-point increase in the benchmark interest rate. That is now fully priced in the markets. S&P 500, 8 points higher. That's up 0.2%. We're at 4530 on the index. The Dow Jones Industrial Average up 224 points. And the NASDAQ 100 right now 70 points lower. That is down about 0.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Madison and Paul.
All right, John Tucker, thank you so much. We appreciate that. Madison Mills, thank you so much for joining us this morning.
So happy to be back, Paul.
A lot going on out there. We had some retail sales came in, as John was just reporting on. Look at that control group, up 0.6%. That's twice what the forecast was, and compared to last month of up 0.3%. So the consumers still out there. It's going to be really interesting to hear from the retailers later in this earnings season coming up. So looking at the markets, John just reporting, kind of red and green on the screen. Let's check in and see where some action is. Bailey Lipschultz, markets correspondent for Bloomberg News, joins us here in our Bloomberg Interactive Broker studio. Bailey, what do you got?
Yeah, finally, I love earnings season because we have reasons for stocks to move. So while you do have Microsoft, Amazon, Apple, NVIDIA, Google all trading to the downside, you have strong moves higher in the like of Schwab, Bank of America, Morgan Stanley, all after quarterly results. Wall Street very much had been talking down their expectations, but when you look at the prints coming across the board, Morgan Stanley jumping as revenue beat and cost, despite cost rising, Bank of America's trading arm helping profits beat expectations, and Charles Schwab management talking about deposit growth by year end. So all three stocks in the green. Top performer in the S&P 500 this morning is Schwab. Earnings season is here in full force, and we will get results from big tech coming over the next few weeks, but it does seem like the results we've received so far have been better than feared, at least.
Yeah, I want to see, we're going to talk to Allison Williams and Herman Chan of Bloomberg Intelligence in the next hour about these bank earnings. I want to ask about, what are the companies saying, the banks saying about that real estate loan risk out there? Just as I walk from Penn Station here to Bloomberg this morning, again, you walk past a lot of really awesome office buildings, but not a lot of people in them, and I wonder what that means. At some point it's going to have to come home to roost.
Well, it's even interesting here where we are on the corner of Lex and 59th, because we obviously have Bloomingdale's, but you look at all the open retail area, and that's not even discounting who knows what's above, because I don't really know offices, but when everything seems empty, it's not optimistic, at least.
Which has been so upsetting for me, because pre-pandemic I used to do a little lunch shopping, and now the only option I have is Bloomingdale's, so I'm being very negatively impacted by this. Bailey, I also want to talk to you about this Jefferies note that came out today on Apple, which I found incredibly hilarious. They call Apple the most boring buy out there. They're basically like, yeah, you got to do it. You got to have Apple, but it's not an exciting stock to them anymore in terms of growth values and projections. What are your sources telling you about the likes of Apple and that Magnificent Seven moving forward?
Well, Apple's been such an interesting topic to discuss with active managers, because when they look at the rush that we saw on anything around AI, a lot of people were quick to point out that across the Magnificent Seven, for the most part, Apple and Amazon don't have the clearest shot. So it's not like you're looking at a Microsoft and their investment in OpenAI. You're not looking at Tesla, which I guess who knows what Elon Musk is going to do there. But if fund flows are coming back, Apple accounts for more than 7.5% of the S&P 500.
Just itself? Holy cow.
Yeah.
And within the NASDAQ, it's just over 12%. It trails the Microsoft. But so when you see money going into the SPY, when it goes into the Qs, the TQQQ, which is the triple lever to the upside, NASDAQ 100, that's got to go somewhere. So that's part of the reason that some folks have been a little bit skeptical or more cautious on Apple, just because when money is flowing in, it has to buy stock. But again, when you look at it across Wall Street right now, it trades at $193. 34 buys, 13 holds, 4 sells, so not a screaming buy. Average price target implies a drop of 1%, but it is hard, I have to imagine, if you're building a portfolio, to go underweight Apple, just given its resiliency.
Yeah, absolutely. I mean, I think, a lot of folks are saying, again, it's almost a consumer staple. I mean, now, it's just so ubiquitous in American, but you think about the free cash flow. And to me, that's one of the bigger issues for this stock. What do they do with all this free cash flow? It doesn't seem like, there's anything of size they could buy that would move the needle. So it's just all about, buying back stock.
Well, potentially what they do is invest in something like the headset, and this is going to be the first earnings call and situation where people are going to be able to ask questions about that headset since they announced it. So I can't wait to hear how they justify the investment there.
Well, the funny thing with the headset is it's so interesting because it reminds me of, obviously, Apple's released a number of products that have changed the way we live. But I remember when they came out with the pen, and it was like, how many people are going to spend $180 on a pen? And I know plenty of bankers who were like, yeah, I'll spend $180 on a pen, but I'm not going to. Whereas the headset, if Zuck is right, if the future is that, it makes sense, and people have
What's
loyalty.
the price for a headset?
$3,500? Is that right?
Something very high. That sounds right.
It's close to that, you guys. I might be wrong, but it's something in the $3,500 range.
Matt Miller, I assume, will be an early adapter.
He's going to get it as soon as possible. That's true. Yeah.
So, on the banks here, one of the banks I'm going to be looking for after the close is Western Alliance.
Yep.
It's a bank. It's one of those regional banks. I was kind of caught up in all the issues. But, a lot of the Wall Street analysts have kind of jumped on this thing and saying, I think this is a buy here. So it'll be interesting to see, what they say about deposits, what they say about loan growth. And that's going to be, I think, going to be really important for some of these regional banks. And again, we're going to have Herman Chan from Bloomberg Intelligence on the next hour to kind of preview that.
Well, the funny thing, not funny, but when you think about Western Alliance, if you asked me a year ago, I don't know that I would necessarily know who they were, but because of all the banking contagion and the crisis fears that we had, it became a household name. And again, it was trading sell-off pre-banking crisis concerns at $72, now at $43. So, Paul, to your point, if it can kind of follow Schwab's footsteps and allay those concerns, plenty of upside.
Yep, absolutely. All right, Bailey Lipschutz, thanks so much for joining us. Bailey covers all the markets for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We got some eco data today. We've had a lot of economic data really over the last week and a half. A lot for the Federal Reserve to chew on as it thinks about its next rate decision. Let's bring in Ira Jersey. He covers all that interest rate stuff for Bloomberg Intelligence. He's down in the Princeton campus of Bloomberg Intelligence, the core HQ for BI. Ira, again, we had some retail sales number today. Some industrial production numbers came in, I guess, a little bit weaker than expected. Anything here over the last several days changes your opinion that this Federal Reserve is probably going to raise rates here at the end of the month, and then after that, it's I guess, still a guessing game?
Yeah, it is probably still a guessing game, Paul, afterward, especially since before the September meeting, we effectively get 2 months' worth of data, right? So it's not just a single month like we kind of have now in between the June and July meetings. The data's been pretty mixed. Today's data is just proof of that. We had pretty weak industrial production numbers. That doesn't look good. The goods sector, manufacturing, is not doing well in the United States, and indeed globally. There's a slowdown in manufacturing. And then, but on the other side, spending was really good. When you look at the control group, so this is the GDP input from the retail sales numbers this morning, and that was solid. So yeah, very mixed data in terms of what's gone on in the business sector and maybe setting up for a recession versus actual spending data, which looks pretty good.
So Ira, in terms of what you anticipate the meeting minutes looking like coming out of this next Fed meeting next week, do you anticipate the majority of the conversation being about what the Fed is going to do in the fall versus a justification for what we expect to be a hike next week?
Yeah, so I don't think the minutes of this meeting will be particularly interesting because there's not a summary of economic projections that are coming out. So they don't, they always tweak, in the intermeeting period, kind of here's what happened. But those big discussions about more forward-looking information will come more from the September meeting when we do get a new dot plot summary of economic projections. Where do we think unemployment and GDP and everything else is going to be? So I think September will be much more telling in that regard. My feeling is that the Fed this week is going to say, okay, we're hiking again. They basically promised that they were going to, and they'll say, but we're going to reevaluate meeting by meeting, and they'll continue with that type of discussion. You go back to this time last year, and the Fed was still saying we're continuing to increase interest rates, right? So they were almost promising that they were going to keep going, not necessarily at what pace, but that they were going to keep hiking rates. And now they're significantly more data dependent than they were a year ago for each in between each individual meeting. So this is kind of like a placeholder meeting, I think, in a way, where September can be much more telling as to the future of interest rates.
Is this Federal Reserve ever going to come out and say, basically, hey, we did a good job. We got inflation down. It's going in the right direction. We were aggressive, but it's working.
Well, they've already started to say that Jay Powell during his press conference and in some of the other conferences and meetings that he's had in between, whether it was before Congress or over in Portugal at the ECB summit, he's basically said, look, inflation is trending in a direction that we like, but the job's not done. So I think from his standpoint and from their standpoint, they won't say anything like that until it's very clear that the PCE deflator is below 3%. Once you get there, I think they can say that we're approaching our target, and then they'll pat themselves on the back maybe a little bit and basically say, job's done, but we're being cautious.
And what's your timeline these days, Ira, for when we can anticipate that celebration?
Yeah, so I think before the end of the year, the Fed is going to be able to say, we've gotten inflation back toward or near our target level of 2%. So because of that, we can remain on hold, and they'll always continue to use the buzzwords of we're continuing to watch economic activity and inflation and jobs and everything else. I don't think that they're going to cut rates until later next year, so a little bit beyond what's being priced. The market's still pricing for cuts in the first quarter of next year, or the first cut in the first quarter of next year. I think they're not going to ultimately cut until later next year. Once they do, I think that the economy is going to be weak enough that they'll have to cut much more aggressively maybe than what the market's pricing.
Well, to Paul's point about when they can start to celebrate, I wonder when we might have a Fed that does a little bit of a post-mortem and looks at the lag in raising interest rates and maybe is open to discussing in an effort to build some credibility that they maybe dropped the ball a little bit too early on. Do you anticipate anything like that happening?
Well, I think everyone and the Federal Reserve always does some self-reflection, and certainly they can be criticized for, not even the rate hikes. Like if I were to do a postmortem on what the Federal Reserve did and the actions that it took, I think the single biggest thing that they did was they continued quantitative easing too long. Mm-hmm. They could have ended quantitative easing in the spring of 2021, and started to hike in early 2022, similar to what they did. But they didn't take any hawkish actions until maybe it was a little bit too late. Now, once they got going, they obviously, as we know, they really got going. Yeah. and kind of played catch up. So and it's not unusual for central banks to do that because they don't want to be seen as hiking and tightening monetary policy too early. But there's other actions now that they can take other than the blunt instrument of actually hiking interest rates, especially when they have balance sheet policy that they can play with.
Ira, when you talk to institutional investors, what's the recession talk these days? Do people think it's kind of off the table, or at the very, very least it's going to be short and shallow?
Yeah, most of the people that I talk to think that we're going to have some form of soft landing. I don't know if it's a recession. How you define a recession obviously matters a lot. Whether we get a recession that the NBER classifies as one, I think is still very much up in the air, and a lot of investors are kind of looking past that and saying, okay, look, when we look at the hard data, when we look at the retail sales data, which is a hard data point because it's actual sales in the economy, that looks pretty good, and employment hasn't yet completely rolled over. Although we have slowing job growth, we don't yet have job losses. it's pretty rare to have a recession and no job losses. So I think a lot of people are very hopeful that we'll have a soft landing. I think rates investors are a little more skeptical and a little more pessimistic than, say, equity investors that I've spoken to. But there's a lot of people who are confused because we do have this variety of data, like I said, that you look at the ISM surveys and they're suggesting that we're going to have a significant slowdown, but at the same time, you get retail sales numbers like we had this morning, and people are like, maybe the survey data is not going to be right.
All right, we're going to be on alert for more data. We obviously have at the Fed next week with their announcement. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us there. Looking at the markets, a little bit of red and green on the screen. S&P up about 0.2%. The Dow up a little bit more, close to 0.6%. But the Nasdaq off about 0.2%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Dan Schwartzman.
Thanks, Paul. Bank of America showed impressive gains as second quarter profits soared due to a surprise gains brought in by fixed income and equity traders. Those gains were able to mask a slight miss in expected net interest income, which still came in at over $14 billion. Bank of America's deposits, though, did fall over 1.5% to $1.88 trillion, which was less than the 3% drop analysts had predicted. BlackRock says Saudi Aramco Chief Executive Officer Amin Nasser is joining its board. The story from Bloomberg's Charlie Pellet.
It reflects the asset manager's commitment to the Middle East as part of its long-term strategy. CEO Larry Fink said in a statement, Nasser has led the world's biggest oil producer since 2015, including overseeing its public listing, and provides BlackRock with, quote, a unique perspective on key issues facing the company and its clients. According to data compiled by Bloomberg, BlackRock, the world's biggest asset manager, has a $2.4 billion interest in the oil producer. In New York, Charlie Pellet, Bloomberg Radio.
Thanks, Charlie. Visa and MasterCard have been accused of overcharging the Square payment platform, resulting in an antitrust lawsuit. The suit alleges that the so-called interchange fees were inflated so that the two credit card companies can maintain their market power. Block Incorporated, which is a new name of Square, says the inflated fees resulted in higher prices for consumers. NBC Universal raising prices on its Peacock streaming service for $1 or $2 more a month, depending on your plan. It's the first time they've raised prices since 2020. Those are the company's stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages right now, they are mixed. Traders fully pricing in a quarter-point hike in interest rates by the Federal Reserve at their meeting next week. 10-year Treasury yield, that is falling after figures on industrial production and retail sales. They missed estimates. Then you have the earnings today, the bank earnings. Bank of America, a surprise gain from its core businesses. Morgan Stanley, they saw a slowdown in trading and investment banking. Right now in the S&P 500, you have 8 of the 11 major industry groups are higher. Energy, the best performer. Information technology. Right now, that's the biggest drag. The S&P 500, 6 points higher. That's up 0.1% at 45.29. The Nasdaq 100, 71 points lower. That's down 0.5%. And the Dow Jones Industrial Average is up 201 points. That's a rise of 0.6%. 2-year yield at 4.70, 3 basis points lower. The 10-year, 4 basis points lower. That's at 3.76. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. You look like you just stepped off a yacht.
Exactly, and I'm about to
That's
hop
a
back
good look
on
for
one.
you.
It is a good look for me. See, I want to be dressed in golf attire in case somebody walks past the studio looking for a
And
fourth.
says, get on my jet, we're going to Bermuda
Exactly.
to play 18.
That's
I wanna
how
be
I
that
always
guy.
dress, you guys.
All right.
That's how it works.
Good luck on that one.
Good luck on that one. I've been doing this for 14 years, nothing so far.
Oh, it's only a matter of time, Paul.
Exactly. All right, listen, we had after a brutal 2022 in equities and fixed income, 2023 is treating investors a lot better here. It started the first half of the year, S&P up about 15% or so. We've added a little bit more to that since here in July. The question for a lot of folks is, now what do we do? So let's check in with somebody who does this stuff for a living. Kara Murphy, CIO of Kestra Investment Management. She joins us live here in our Bloomberg Interactive Broker studio. No phoning it in today. So Kara, you know, a good first half of the year for a lot of investors, particularly those that owned Apple and Amazon and Meta and things like that. What are you telling your clients here as we kind of kick off the second half?
Well, thanks so much for having me here. And we've called 2023 the revenge of the growth stocks.
Okay.
Nice. So it's all those stocks that underperformed so much in 2022 came back with a vengeance and really turned on a dime in the first half. But when you think about, you know, largest 7 stocks in the S&P were up about 90% year to date. Just mathematically speaking, that can't continue forever. So we've started to see the market broaden out a little bit. Russell 2 is coming back a little bit, seeing some mid caps do better. So that's healthy for the market. So, you know, and there's a fair amount of economic momentum as well. You know, we're still cautious on kind of where we are in the economic cycle, but consumers remain really strong. Balance sheets are relatively hefty. So, you know, in my mind, it's kind of a back to basics where you want to be able to have a diversified portfolio because nobody can call those big turning points. And you can't be stuck in a handful of stocks that are suddenly going to turn around the wrong way.
You mentioned the Russell 2K, and they broke out of that key resistance level last week. I wonder to what extent you look at that versus the Dow breaking out of its key levels as well. What are you thinking in terms of the comparison of the two indices?
Well, frankly, as a practitioner, the Dow we don't pay all that much attention to because it's a fairly concentrated measure of what's happening in the market. The Russell 2 is a pretty good representation of what's happening on the smaller side of the market. S&P 6 is also a very helpful indicator because you take out some of those really small cap names in the Russell 2000 that are not that meaningful. So all of those, again, are starting to see a little bit more life. But remember, like, small caps have been beaten up for years. We really have never had that long kind of streak of small caps outperforming, at least not in recent history. So this could be a sign of some more resiliency in those smaller names.
On the fixed income side, I mean, you know, it was brutal last year. There was nowhere to hide in fixed income. This year, I can just go sit in a 2-year treasury and get 4.7%. That feels like, you know, just paradise. What should I be doing in fixed income? Should I be taking a little bit more risk than the 2-year treasury?
Well, it's been so interesting to watch investor psychology with, as you said, 2022, fixed income was left for dead. I mean, it was really an existential crisis. And we had a lot of clients who were coming to us saying, why do I own fixed income at all? This year is a very different story where all of a sudden people are very happy sitting in a 2-year treasury or a money market earning attractive returns that we haven't seen in decades. So the reality is somewhere in between. Fixed income is still a really important asset class. You can still build a really great diversified portfolio that will do well over time. but it's hard to kind of draw people out of that very safe place after the volatility that we had last year. So eventually, as we start to see the yield curve kind of revert, get to a more normal position, I think gradually investors will be drawn out the curve and into some other asset classes. But you're right now they're pretty comfortable.
Yeah, and in terms of that volatility, obviously, the banking turmoil, crisis, whatever term you want to use there comes to mind. How are you thinking about the long-term effects of that? Do you think that it was overblown a little bit, or did we underprice the impact?
I think there was a moment there where we were kind of looking across the financial abyss, right? Like we had 3 very large financial institutions that failed very quickly. The good news is that regulators already had a pretty good playbook from the financial crisis. They moved in size, in force, and it was coordinated. So it worked out okay from a systemic perspective. It didn't have to be that way, and I credit regulators with managing through that. But there are lasting implications, and the big one is tighter lending standards, and we're seeing that come through in force. Small businesses can't get loans. Loan officers are really tightening up, and that will be a drag on economic growth for the foreseeable future.
How about outside of the U.S.? Are you suggesting your clients look at, I don't know, Europe, for example? We've got the dollar pulling back off of its recent strength. How do you think about outside of the U.S.?
Yeah, similar to fixed income, a lot of non-U.S. equity markets had kind of been left for dead because the S&P 500 was the best performing asset class for year after year. Mm-hmm. So we've been encouraging people to remember that non-U.S. stocks are still a really important part of a portfolio. In particular, you mentioned the dollar. So the dollar has started to retreat a little bit. If we have inflation licked here, and Europe is still battling it, that will also be a drag on the dollar. So that is good for non-U.S. investments. But then also when we look at EFA valuations versus the U.S. tends to trade at a higher valuation relative to EFA in general, but that has gotten to like 2.5 standard deviations above the norm. So it definitely looks like the valuation differential, you're being paid to take a little bit more risk outside the U.S.
And then, if you're getting paid to take on risk outside of the U.S., what is the allocation looking like then for those emerging markets?
So emerging markets is a little trickier because those have much larger kind of cycles. There's been a lot of talk about China just not coming back online like it was expected. Yeah. Some of those Asian emerging markets that rely a lot on China have actually been more resilient than expected. So emerging markets, I think, is an important allocation to be able to have in a portfolio, but you want to size it appropriately. If you're a very conservative investor, you don't want a huge amount of allocation there.
All right, we're just starting to really get into the teeth of earnings here. What are you guys and your teams, what are they kind of looking for this earnings season? What are you kind of listening for on earnings calls?
So certainly the banks are going to be really important. We started to see some come out today. We talked about lending standards. So how cautious are companies or banks in particular being in terms of writing new credit? Also, what about the credit that's already on their balance sheet? So consumers, we're starting to see delinquencies tick up a little bit. What kind of behavior are they seeing? And then also in commercial real estate, office in particular, right? We've seen a lot of concern there, and it hogs up a lot of balance sheet on regional banks. So that's going to be very important. And I think more generally looking at consumer behavior. So are people starting to trade down a little bit? We're certainly seeing it outside the U.S. where people are trading to, more private label, cheaper goods. And so how are people reacting, particularly in anticipation of things like student loan payments coming back again?
That's right.
When you think about trading down specifically, I feel like in the last earnings cycle on the consumer discretionary side, at least, it was kind of a mixed picture of the consumer, like Target bad, Walmart obviously good. How do you suss out the information that you're getting throughout an earnings cycle to come to one conclusion about the consumer?
Yeah, it's a challenge.
What's the secret to your job?
Because as you point out, there wasn't a single tune, right, in the last earnings season. You heard some areas of caution, some areas like, no, we're good. So you kind of have to put it all together, like studying for the CFA, you're talking about mosaic theory. So that's really what it is, taking all these little pieces and then stepping back to see what picture is forming. So I think we'll know a little bit more in a couple of weeks.
You're based in Austin, right?
I am.
How long have you been there?
Oh, cool. Only a year, but
right,
I've been
so you're
in
one
Texas
of those.
5.
You've been in Texas. I'm just wondering, where is Austin putting all these people? Are you putting like trailers or something? I mean, can Austin handle all these people coming down?
It has been a challenge. It is very difficult to get a dinner reservation on a Friday night.
How about traffic? Because what we've seen in some of these southern cities, even Atlanta hasn't been able to several decades after it exploded in growth to deal with the traffic.
Well, I always laugh when I hear Austinites complaining about the traffic. I mean, like, no offense, Austinites, I love you guys, but you know nothing about traffic.
You do not know.
I spent most of my life in New York City. And
Yeah.
traffic in Austin is just fine.
And so what's the back to office situation in Austin? What are people generally doing?
So much more than what you would see here in New York City. So we're back 4 days a week, and we have been for a year. And so there's certainly a fair amount of people still remote and will probably remain that way, but simply because, commute times are much less than what you find in a place like New York. So a lot of people are back in the office at least a few days a week.
Is Austin still weird?
Oh, for sure.
For sure.
Yeah.
Keep Austin.
I love it.
Yeah, it's kind of
Such a funny tagline. No, Austin is amazing. It's like the best.
And they have a school there, I think, right? The university or something.
They got a small one. Yeah.
Okay. All right, Kara Murphy, thanks so much for joining us. Kara Murphy's the CIO at Kestra Investment Management. She's based in Austin, Texas, but we got her live here in the Bloomberg Interactive Broker Studio, so we always appreciate that. Thank you very much for joining us, Kara. Markets here, kind of mixture. Look at the Dow Jones Industrials. I have to figure out why that's up 0.7%, which I can do in a matter of minutes. But again, we have this Dow up 0.7%, the S&P up about 0.1%, the NASDAQ off 0.33%. But Bitcoin down below that $30,000 per token. That had been kind of a support. I don't know how technical that support level was, but it's certainly a round number, but it's now below that. So we'll keep an eye on Bitcoin for Tom Keene. Right now, let's head down to Washington, D.C. We'll get all the national news with Nathan Nathan.
All former President Donald Trump says he is a target of the Justice Department's January 6th investigation. In a statement posted to his Truth Social account, the former president said he got the notice Sunday night from Special Counsel Jack Smith and was given 4 days to appear before the grand jury. In his words, that almost always means an arrest and indictment. We got reaction from Pangea Policy founder Terry Haynes.
Another potential arrest and another potential indictment really comes down to a situation where Trump gets taken down, kind of death by 1,000 paper cuts.
Terry Haynes at Pangea tells Bloomberg Surveillance it could boost Trump with his base but hurt him with everyone else. Ultimately, Haynes says that would benefit current President Joe Biden. A U.S. citizen is being held in North Korea. The United Nations says the American was touring the Joint Security Area. That's part of the border zone that is closely guarded by the North and South Korean militaries. Multiple reports say this detained U.S. national is a U.S. Army soldier. In a tweet, the UN agency says it is working with North Korea's military to resolve the incident. Another day of blistering heat around the world. Phoenix is set to break a record today with a 19th straight day above 110. Last night's low of 95 was the hottest ever in Phoenix. And in Europe, people are being told to stay indoors. The heat wave there has sparked wildfires in Greece, Spain, and Switzerland. White House climate envoy John Kerry's in China looking for solutions.
China and the United States are the two most powerful economies in the world. We also happen to be the two largest emitters of greenhouse gases.
John Kerry met today with the Chinese premier. Chinese President Xi Jinping says his country will decide its own path on reducing emissions rather than following other nations. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So traders now have no doubt the Federal Reserve is going to start raising interest rates once again next week. That's the betting this morning. Also had a bunch of data today. June's industrial production reports shows producers increasingly getting a little nervous about accumulating excess inventory. And then the retail sales, they rose less than forecast, but you also had an underlying measure there that pointed to a more resilient consumer. Well, economist Jay Bryson at Wells Fargo, he reacted to today's release of the retail sales figures.
I guess in general, when I stand back and I look at everything here, there has been some deceleration in consumer spending. Consumer spending in the first quarter in real terms grew over 4% annualized. We're just not going to get that in the second quarter.
Bank of America, the fixed income and equity traders delivering a surprise gain there. They covered a slight miss in expected net interest income. We have Microsoft and Activision Blizzard nearing the finish line on their $69 billion deal. They're not likely to close it by today's deadline, though. You were asking why the Dow was higher. At least it's being powered higher by one of the stocks there, United Health Group. That has been raised, the price target, by the analysts over at Bernstein. So the stock, they say, is now an outperform. Right now, the S&P 500, 9 points higher. That's up 0.2%. Dow Jones Industrial Average, up 266 points, and the NASDAQ 100, 64 points lower. Paul.
Yes.
And Madison.
Absolutely,
Hey,
John
JT.
Tucker. Thank
I
you
got the
very
air
much.
conditioner turned back on.
You did. You must
I'm
have some
today's
sway
hero.
here.
It's never the right temperature
I
in this
know the
room.
right people here.
I know you do because you've sent me their names. So now I know the right people in here. Let's move on.
I don't know the right people, but I just come here every day. All right, I'm looking at the WIRP function here. We have the Fed obviously next week, Wednesday, I think, 93.6% percentage likelihood of raising rates. What do you do after that, though? I mean, I think inflation is whipped here in the U.S., but nobody asked me my opinion, certainly not at the Fed. I wonder how things are going around the world. Annika Trion joins us. She's the chief economist international for Van Lanschot Kempen, based in Amsterdam. So, Annika, give us a sense of, I think inflation's whipped here in the U.S. I don't know. Talk to us about Europe. How's the inflation story playing out there?
Well, inflation is not whipped yet in Europe, and it's typical, situation that Europe is behind the curve versus the US. So we hope that Europe will continue its path. But I guess the main issue is that especially services inflation, especially core inflation, it's remaining stubbornly high. And that's why Lagarde, unlike Powell actually, has been very, very outspoken. We are not done yet. So we can definitely expect more rate hikes from the ECB.
And when you look at what's going to happen here in the States, the next Fed meeting is a kind of foregone conclusion of another hike. The real question is what's going to happen in the fall. What are you going to be looking at to suss out what the Fed might be doing come September? Are you going to be looking at Jay Powell's commentary next week, other Fed speak? What's your input there?
Yeah, well, the minutes are always fascinating because in the last set of minutes, I think there was a slip of the tongue that we saw. We're using between the language of pause and skip, because initially it was pause, then suddenly the word skip came out, and then, oh gosh, no, pause again. So I think the minutes are interesting. Also looking at what the consensus is. What are the other officials saying? And that was interesting last time because the majority were talking about 2 hikes from here, whereas a couple of months ago, that absolutely wasn't the case. So that incremental change in language across the whole board is interesting. But by far the most important thing is, also in the US, what is going to happen to core inflation? And yes, it looked less bad than expected in the last print, but we're still nowhere near the 2% targeted number. And maybe last point, if I may, the 2% targeted number, I don't think, you're going to see that coming at this stage, but you could argue, is 2% even a relevant target? Probably too early for that discussion to come up.
Annika, are you concerned that here in the U.S., the Fed either has gone or will go too far and push this economy into a recession either late this year or into next year that maybe could be avoided?
I think the biggest concern is the following. Let's zoom out again. We've spent almost 10 years massively undershooting the inflation target, and now, the last period we're massively over-shooting the inflation target. So if you took a step back and said, well, look, let's tolerate this overshoot period because, apparently it ebbs and flows, fine. And then, we don't need to be so aggressive on monetary policy. We don't need to keep aggressively hiking. Maybe we can avoid this hard landing. That's what the data is telling us thus far, not the leading indicators, but the actual data, and we shouldn't be too worried. However, if also part of the credibility restoration that they're busy with, if they're extremely adamant, we said 2%, we have to get to the 2%, if we don't get there, we keep on hiking, then yes, that could be really painful for the economy because the transition mechanism takes time.
Well, and it takes time, especially in a country like the U.S., where we have so much spending going on, particularly from the government. When we look at Bidenomics and the infrastructure bill, I kept making the joke this weekend because I was on a road trip that I was really seeing Bidenomics in action because the amount of construction that was happening on the highways was absolutely unhinged. So, Annika, when you think about the spending that's happening from the U.S. government pumping that money into the economy, how does that square with the moves we're seeing from the Federal Reserve to try and fight inflation? Can the two come together?
Well, this is exactly the problem we're dealing with, and I'm sure it wasn't a fun road trip having all that infrastructure work being put to play, but that's exactly the problem. So why is it that we believe that inflation is going to be higher structurally for longer? Partly it's because of what you just mentioned. If you add up the Inflation Reduction Act, which ironically is actually resulting in more inflation, if you add up the infrastructure bill, if you add up potential student forgiveness, et cetera, that's more than $1 trillion that's just literally being pumped into an economy where at the other side of the table, you've got the monetary policy makers saying, gosh, we're trying to squeeze out the oxygen from the markets. We want to reduce our balance sheets. We want to increase interest rates. And that's just a juxtaposition. It's very messy. So that's why, there's a fair chance inflation lasts for longer, and the two parties on the same table should figure out, which direction are we going to let this thing go in.
Hey, Annika, China. I want to talk a little bit about China. The reopening, I think the expectations were quite high, what that would mean maybe for the global economy, and we're seeing some weaker than expected data coming out of China. And I think about the exposure, obviously in the U.S., big trading partner, but also think about Europe. Because I think about some of these big European industrial companies and all the big equipment and stuff that they make, they sell into China. Talk to us about kind of how, European manufacturers and European industry are thinking about China and the pace of the reopening there.
Yeah, and to your point, the pace of reopening, we were very excited in the beginning, and that excitement got abated because we see that things are really slowing down. And to what extent will the central bank there put more, as said, oxygen into the markets? We don't know. But I think the company's issue is twofold. So on one fold, it's producing goods that are sold to China and looking at the disposable income, and is that demand going to be robust enough to keep up those exported sales? But I think the other side is maybe more interesting, which is because of geopolitics, because of rewiring of supply chains, etc., companies, also European companies that were relying on part of their manufacturing footprint to be situated in China that have now got to find other locations, that's structurally inflationary in most cases. So, your cost of goods sold are shooting up. And are you able to pass those, higher costs to your customers? Yes or no? You've already passed on quite a bit. Are consumers willing to pay those prices, etc.? That just exacerbates the issue.
Yeah. Annika, final 30 seconds here. Soft landing. How likely is that in your scenarios?
It all depends on, I think, 30 seconds. So the most important thing is how stubborn are central banks going to be on this 2% inflation target? If we're willing to accept inflation being in the 3-4% for longer than expected, and they won't be too aggressive, then soft landing could very well happen. If we stick to it and have to keep pushing policy according to the rule book, it could get more painful.
Annika, thanks so much for joining us. We always appreciate getting your global view, your global perspective. Annika is the Chief Economist International for Van Lanschot Kempen, joining us via Zoom from Amsterdam, giving us the global view. S&P 500 up 0.3%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Dan Schwartzman.
Thanks, Paul. Morgan Stanley's second quarter earnings were hurt by slowdowns in investment banking and trading. The trading unit slipped by 22% from a year earlier, which led to results that were weaker than analysts had predicted. The good news for the New York-based firm was that wealth management set a record for net revenue with $6.66 billion. That's up 16% from last year. Morgan Stanley, though, did have to pay out $308 million in severance costs to the more than 3,000 jobs it eliminated earlier this year. Overall profits falling 13% to $2.18 billion. It's getting harder for Americans to get loans. Bloomberg's Gina Cervetti with more.
More and more Americans are being turned down when they go for loans. A new Fed survey found that the rejection rate for applicants jumped to nearly 22% in the 12 months through June, and that is the highest level in 5 years, thanks to the combined impact of high interest rates and caution among lenders.
Thanks, Gina. Citing competition from Tesla and General Motors, Ford unexpectedly announcing that it's going to cut the price of their electric F-150 pickup truck by as much as 17%. Commercial buyers will now be able to buy an F-150 Lightning Pro for as low as $50,000 for a base model. That's a savings of around $10,000 from a year ago. With both actors and screenwriters on strike for the first time since 1960, television networks having to get creative with their fall schedules. CBS will be airing the cable hit show Yellowstone from the pilot episode, which aired back in 2018. The network also plans to run more game shows and reality programs as well. Those are the company stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills, Paul Sweeney here in our Bloomberg Interactive Brokers studio, looking at these markets, still kind of red and green on the tape. S&P up 0.2%, the Dow up 0.9%, 318 points. We're on that 35,000 watch for the Dow Jones Industrials, 34,900. So we'll keep an eye on that. I like round numbers. Nasdaq a little bit softer today, off 0.2%. Oil resuming its climb here, up 1.6% again today. $75.30 per barrel for the West Texas Intermediate. So we'll keep an eye on that as well. Right now, let's head down to Washington, D.C. We're going to get world and national news, and we'll do that.
We're keeping an eye, Paul, on the mounting legal pressure against former President Donald Trump. He now says he has been told he is a target of special counsel Jack Smith's investigation into January 6th and efforts to overturn the 2020 election. In a statement posted to his Truth Social account, Trump said he was notified by letter on Sunday night and given 4 days to respond to the grand jury. The statement says that almost always means an arrest and indictment. This word from the former president comes as Trump's attorneys are preparing for the first pretrial hearing in the special counsel's classified documents case. That proceeding is set for this afternoon before Trump-appointed Judge Eileen Cannon in Fort Pierce, Florida. A U.S. soldier is being held in North Korea. We've gotten that word from a U.S. official after the United Nations said a U.S. national had crossed the border from South Korea while touring the Joint Security Area. That is part of the border zone that is closely guarded by both Korea's militaries. Democratic Congresswoman Alyssa Slotkin visited that zone in 2021. She told CNN today this is one of the most constrained areas in the world, and it is not likely someone could have mistakenly wandered off. Florida Governor Ron DeSantis is in South Carolina today. He's filed paperwork to become the first major party candidate for president to appear on the first in the South primary ballot. Of course, we've been following the governor firing some staff, trimming back his travel schedule as he deals with a cash crunch. But DeSantis told ABC News today that his campaign is in a good spot.
In the second quarter, we were a candidate for about 5.5 weeks. Our campaign raised $20.1 million. Joe Biden's a sitting president of the United States. To his campaign committee, not the DNC, he raised 19.9. Donald Trump raised 17.7 million, and Trump spent more than we did.
Governor DeSantis there speaking with ABC News. President Biden is meeting today with Israeli President Isaac Herzog. This comes as protests against Israeli Prime Minister Benjamin Netanyahu's government shift into high gear. Demonstrators marched into the Tel Aviv Stock Exchange this morning. They were handing out fake shekels and waving signs saying, "Save our startup nation." This all comes in protest over a law that would weaken Israel's judicial system. Trading in Tel Aviv was unaffected. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg. Paul and Madison.
All right, Nathan Hager, thank you so much. We appreciate it. You know what's interesting in sports? The NCAA, finally, the kids can make money off of their name, image, and likeness, NIL. John, tell us about that.
Yeah, it's an interesting Bloomberg story. You know, all the big deal, you're talking about like big athletes making money doing this, but the majority of deals involve marketers and students you've never heard of. Right. And since the NCAA changed the rules, it has also opened the door to scammers. So you know, a lot of students signing deals with sort of these shady marketers where they have to pay the money up front with the promise of getting paid. And a lot of them, when getting the checks that they were promised, go to the bank, deposit it, and find, whoops, the check bounced.
Don't ever do anything where you have to pay first, right? That just seems like a really good...
You know how much money I had to pay to get to sit with Paul?
Exactly. Yeah, that's big.
Millions.
But if you're
reaping benefits.
I mean, if you're like on the rowing team and somebody offers you some money, that sounds like a good deal. But I mean, the NIL is for these big ticket sports, basketball, football. But I guess it's available to everybody, and in theory, it's a good thing for the college athletes to get paid for their name, image, and likeness. But again, like everything else, you got to be careful. All right, we're gonna have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney.
I'm looking at just brutal losses in the fixed income market. What's happening in the commercial real estate biz? Do we have a problem? How big is it going to get? It seems like people want a job, they can get a job. You can't have a recession in that kind of scenario, can you?
Breaking market news and insight from Bloomberg experts.
Banks have to either raise capital or shrink their balance sheet.
Pricing power remains strong.
The best way to predict what the Fed's going to do is think about what they should have done a year ago.
Jay Powell's never going to say never.
Bloomberg News breaking down all the market action out there.
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madeline Mills, Paul Sweeney here in the Bloomberg Interactive Brokers studio. And you can also check us out on YouTube, streaming live. Just head over to YouTube and search under Bloomberg Global News. Coming up in this hour, we're going to break down what's happening with President Trump. Apparently he got a letter today saying he is the target of a January 6th probe. I can't keep it all straight, but June Grasso, our legal reporter, she does. She's going to join us and help us figure out what's what with the former president. And then we're going to break down some of these big bank earnings and some of the earnings, just as importantly, of these regional banks. We do that with Allison Williams and Herman Chan. They cover the banks for Bloomberg Intelligence. They're going to be here in our studio. They're going to help us break down all the bank earnings. But right now, let's get a Bloomberg Business Flash with John Tucker.
All right, Paul and Madison, the major averages, they are mixed right now. In the S&P 500, you have 8 of the 11 major industry groups. They are in the green right now, being led higher by energy. The biggest drag, that is coming from information technology. Yet figures on industrial production and retail sales, missing estimates on top of mixed results from Bank of America as well as Morgan Stanley today. So you throw all that in the blender, you have stock indexes looking for direction right now. Katrina Dudley at Mutual Series increasingly is convinced that the U.S. economy will have a soft landing.
If we do have a recession, it will be what we've called a little R recession. I think now we're coming to the point where we're calling it the Godot recession because it's a recession that we're all talking about. We're all expecting it to arrive. And all of the data is kind of starting to show us that maybe we won't have that recession.
We just love a Samuel Beckett reference there when talking about stocks. S&P 500, 13 points higher. That's up 0.3%, 4536 on the index. The Dow Jones Industrial Average up 334 points. That's up 1%. The Nasdaq 157 points lower. That is down 0.4%. And ready or not, the student loan repayments, they are going to begin in the fall. Wells Fargo has done an estimate saying the typical monthly loan payment is going to be between $210 and $314 for millions of borrowers. So that works out, they say, to a pay cut of anywhere from 4 to 5% for most people.
Oh, God. It's real.
Devastating.
Those numbers keep getting bigger.
And that is your Bloomberg Business Flash.
It certainly is. John Tucker, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in our Bloomberg Interactive Brokers studio, looking at these markets here. A little bit of red, a little bit of green. Let's break it down with Bloomberg Markets reporter Jess Menton. She joins us here live in our Bloomberg Interactive Brokers studio.
So I'm taking a look, not surprisingly, at what Morgan Stanley is doing. There's been a lot of talk about different mixed results on the banks. Obviously, we did hear from J.P. Morgan, Wells Fargo, and Citi last week. When you're looking at Morgan Stanley, though, that ticker symbol MS, it's up over 6%, despite some of the results being mixed. At a particular point, it was up a little over 7%, so that would have put it on pace for its best post-earning reactions day since about 2013, and that's some data that Elena Popina and Bree Bradham on our equities team were taking a close look at. So kind of looking at that and wondering, well, how do you see that reaction when a lot of people are talking about some of these mixed results? Well, we always talk about how big of a portion it comes to wealth management for its results. It's really the primary driver at about half of the business, so its reliance on wealth management has helped really continue this sort of steady earnings stream and boosted its valuation when you are looking at it relative to peers. So its revenue did rise about 16%, specifically in its wealth management business, and the unit did account for nearly 50% of the company's total revenue in the quarter. So when you're looking kind of more broadly at some of these bank stocks, that's why you're seeing that one outperforming today.
I don't know. I think about it. I competed against Morgan Stanley for decades. They are so good in so many different businesses that they are a tough competitor. I would not bet against those people, market issues aside, because they trade well. Their advisory business is extraordinary. Right. And now they built this private wealth business, which is really the envy of the industry. how does that stock not work? I don't know. I look at ANR function, 17 buys on this stock, 12 holds and 1 sell. So there's a lot of people out there that are still cautious on the name.
It is, and especially because tomorrow we'll hear from Goldman Sachs, one of the final big banks, to kind of wrap up this earnings seasons for that particular group. But that one has been really struggling to stand out when you're looking at that stock. A lot of it obviously has to do with, unfortunately, it's shaping up to be its worst quarter under its chief executive, David Solomon. But the bank has done kind of what you typically would see, but more so really downgrading and lowering those expectations heading into the results. And so it's going to be interesting to see just exactly how the stock actually ends up reacting to this, because we see not just for banks, but for many companies during earnings season that are lowering kind of those expectations. So maybe we might actually see the inverse of that. And they talk it up on their earnings call tomorrow. So that's
if
something
I were
I'm
a trader,
watching.
hedge fund person, and I traded in these financial stocks, I'd buy some Goldman Sachs today. I think the sentiment is so bad for this earnings print.
Right.
That now they may do a kitchen sink thing and throw everything in there because the sentiment is bad, or they may just beat just enough, and you see the stock just kind of rip tomorrow. So that's my call. So I made it here
That's
today.
a good call,
I'm
Paul.
buying some Goldman
I'm
Sachs
excited.
here at the market, 337, spot 12, and we'll see what happens tomorrow.
All right. Yeah, a lot of that was just those material markdowns that we saw when it comes to that real estate book. So that'll be key tomorrow. But then obviously we know Netflix is coming in the middle of this week too.
yeah.
So when we're thinking about, because a lot of these big tech and growth stocks are going to be sprinkled out through. We'll have that. We'll have Tesla next week, Meta, Microsoft, Google. The following week after that is Apple. So we don't have them all housed in the same week like we did last time around, but obviously that's going to be another big thing, and especially when it comes to how well we keep talking about sort of narrow concentration and valuations when it comes to these tech and growth stocks. But if you're looking at Bloomberg Intelligence data and what the estimates are, I mean, these tech companies in particular, and especially when you're looking at the 5 biggest stocks in the S&P 500, they're supposed to post earnings growth year over year of about 16%, and that averages a contraction if you're looking at the S&P 500 around 9%. So these big tech stocks still looking brighter, and especially not just because of the AI argument. I mean, a lot of this has to do with just the cost cutting and headcount reductions that we've seen that started last fall, especially with stocks like Meta. I mean, that's not necessarily an AI story. A lot of that is cost-cutting story and how that translates to their margins.
Yeah.
So that's going to be a big key focus too this week.
What are your sources telling you about how the rebalancing of the NASDAQ and the impact that has had on Meta sort of being left out of that? What is that going to mean for Meta?
What's interesting specifically about Meta is it bases this cut in the NASDAQ even though it missed the rebalance levels. So that was the big thing, because a lot of this doesn't get taken into effect until right before the trading of next Monday.
Okay.
But so NASDAQ actually put out a release to clients late on Friday. And so they were talking about how, so Meta's representation in the index, it's around 4.5%. And so that's basically where the key level was for all of these other big companies, tech companies that we're talking about that breached that sort of out of cycle adjustment that ended up being triggered at the beginning of this month. But now when you're looking at this, it actually could potentially be included in that. And so the predictions for the new weights when it comes to this is tricky, because we have to wait till the beginning of next week to see how all of this actually goes through. But Meta could potentially be part of this. And what happens when you're combining all of these big companies with that? The representation was actually around 55%. Now it's supposed to drop to about close to 44%. So that's going to be the big thing. But even though it seemed as if Wells Fargo, Chris Harvey was thinking Meta could potentially be left out, now it looks like that could actually be included.
All right, Jess, thanks so much for joining us. Jess Menton, a Bloomberg equities reporter, joining us here in our studio, breaking down the movement in the market here. But we've got some news today involving, once again, the former president, Donald Trump. He received a letter saying he is a target of the January 6th probe. I can't keep all this straight. He's got a lot of balls in the air as it relates to his legal challenges here, but someone who does do this for a living is June Grasso, Bloomberg Law host. She joins us here in our studio. June, it's federal. It sounds important to me. It sounds like it's big. Help us understand it. Okay.
It's very big. So you get a target letter. A federal prosecutor sent out a target letter when they think that you are the focus of the probe, and then you're allowed to come in with evidence or talk to the grand jury. And no one wants to testify before the grand jury. And Certainly Donald Trump won't. He got the same kind of letter before the documents case, but this is a broad investigation into January 6th and the efforts to overthrow the election. And they have been talking to witnesses for months. Witnesses as high as Mike Pence, former vice president, and then, aides to Trump and everyone in between, Mark Meadows, Rudy Giuliani, officials in different states. And the focus that we think the focus is, the first focus at least, one, is that of fake electors, that there was a scheme that Trump had to have different electors in battleground states submit fake forms that they were certifying the election, and that fell through. So that's what we think it is. It could be a lot of other things. It could be the pressure campaign on Mike Pence to try to also overthrow the election. We'll have to wait and see.
How does that coincide, if at all, with the situation in Georgia when it comes to voting?
There's no crossover here. This is a federal investigation, and so they have their own. I mean, they've been investigating this for months, and they have all the information from the January 6th congressional hearings. So there is no overlap there, except for the fact that if Georgia does bring charges, as expected in August, we don't know what the charges are. That could also be a broad conspiracy charge. So we don't know as much about that, actually, because we haven't been, people have been following witnesses and waiting outside for witnesses to go into the D.C. courthouse. That's another thing. It would be in D.C. rather than in Florida, and I think we've talked before about the advantages for Donald Trump to have a jury in Florida, and wow, the disadvantages of having a jury in Washington, D.C.
Is there any sense as to the timing around this type of investigation and receiving this letter? Where do we go from here?
So last time, Trump was notified that he was a target of the classified documents case in Mar-a-Lago. That was May 19th, and his lawyers went in to talk to at their request to talk to the prosecutors. The theory is that they could convince them not to bring charges, which also never happens. And that was June 5th, and then I think 3 days later, he was indicted. So that's the kind of framework we can look at for, so we would be, and also we've been watching the witnesses, and the last witness of importance that testified was Mike Pence, and that was in July. So we've been watching the witnesses. You end up with the most important witnesses usually. So Mike Pence would be the most important witness. So we've sort of been waiting for something to happen. But I don't know that anyone thought, well, I guess some people did, that it would be, it could have been other people that were indicted. No one thought that it was going to be Trump. And interestingly, Rudy Giuliani has said he has not received a letter that he's a target of the investigation. So it's going to be interesting to see who is indicted.
Well, then what does that tell you about the Justice Department in terms of just how unprecedented this is as a move to kind of send a letter like this to the former president?
Well, this is the second time they've sent a letter like this to Donald Trump, and I think it is what Jack Smith was tasked with doing, which was investigating the classified documents and investigating the January 6th. So he's acting as any prosecutor would in that position. He's fulfilling his task, and he's not thinking, I don't think he's thinking about, all the political ramifications, though it's interesting that he brought the documents case first. That's really the more straightforward case. We think that any case involving January 6th would be a much more complicated case, maybe conspiracy charge, but certainly more complicated. And they've been talking to a lot of people that would indicate they're trying to find out Donald Trump's state of mind, which good luck with that. But anyway, his state of mind as far as, did he really believe that he lost the election? They even brought in the cybersecurity guy that they fired, and he was the one who came out and said that definitely, there was no problem with the election. He was fired by the Trump White House.
So from a legal perspective, June, I don't know if you've done this or you do this. Do you rank all of these various cases and investigations, and kind of the importance or the risk to the former president? Do you rank them? Like, I don't know which to really focus on. Okay. All right, so
I rank them and when you talk to other, lawyers, they rank them.
Okay,
so
what?
This would be the most important case, I think. This would be the most critical case, because the other case, the documents case, is it's important, but it's pretty straightforward, and it's based on the documents. But this would be based on an attempt to overrule and to overturn an election, something that we've never seen in this country, and accusing a former president of this. I mean, this is monumental. The New York case, I think, is well below, and the Georgia case would come in between the federal cases and if it is indicted in fact.
Do we know what the charges for a federal case like this could look like?
Well, we don't know. It could be, I mean, we're thinking that it could be conspiracy to interfere with a fair election. I mean, a lot of the January 6th rioters who've been prosecuted were also prosecuted on interference in an official proceeding. That would be a lower level. I don't think that they would even try seditious conspiracy in this case. I doubt that.
All right, I have to, I mean, as a legal analyst, who would and who will represent and who has represented the president in all these various cases? It seems like you need, you know, just a, I don't know, it seems like there's so many lawyers coming and going. I don't know. And I never hear of any firm I've ever heard of before. So
well, it used to be there used to be firms that you've heard of, some of the lawyers from the big some of the big Wall Street firms, but that stopped a long time ago, and that is a problem for him. He's going to have to look for, I think, new lawyers in this case. I mean, maybe he has some that are already working on this. He's got so many things going, and he's such a bad record with lawyers.
Right.
Lawyers don't want to represent him because he doesn't listen to anything they say, and there's a lot of problems with defending him that way, defending a client who's, unruly and does whatever he wants, and also because of the payment issue where he hasn't paid a lot of his lawyers.
Okay, so is there anything that we should be looking for next?
No, you know what I think will be interesting is today there's going to be a hearing in the Florida case where he's trying to put off that trial until after the election. And I have to look at the timing here, the fact that he announced this. He's a great master of diverting attention away from things.
Right.
So the fact that he announced it last night and this hearing is today, I think it'll be interesting to see what happens in that hearing.
That hearing's at 2 o'clock today. Yes. Do you anticipate, final 30 seconds, does any big news come out of a pretrial hearing like that?
Well, not so much usually, but if there's a trial date set, that would be the biggest news of all, and that's what we have to watch for here.
All right. Thank you for keeping track of this, June, because I can't do it, and we need your help in keeping it all. And there's all kinds of stuff. June Grasso, she is a host of Bloomberg Law. She is our go-to voice on all things on the legal side of the equation, and in covering the former president, there's plenty to cover there. Back to the markets, S&P 500 up about 0.3%, the Dow up 1%, so that kind of gets my attention. And WTI crude oil, again, over $75 a barrel, $75.47. So, it kind of goes to that supply and demand, Madeline, and people tell me, looking at oil, you got to really focus on the demand, and that's kind of what's driving that commodity. So we'll keep an eye on that. Bloomberg Dollar Index off slightly, a little bit of continued weakness in the dollar. We're going to have more coming up. This is Bloomberg Markets. All right, let's get some company news right now. It's Dan Schwartzman.
Hi, Paul. Stellantis says they expect a semiconductor shortage to reemerge as demand grows for electric vehicles as geopolitical risk increases. With more and more consumers purchasing electrical vehicles, the need for more and more complex chips increases. The company plans to spend 10 billion euros through 2030 to secure various kinds of semiconductors. General Motors North America President Rory Harvey tells Reuters that the company can't deliver cars fast enough to dealers. Harvey says that despite the company still facing shipping challenges, it's been able to sell practically anything it builds. It's a big week for earnings reports. Bloomberg's Erica Herskowitz with more.
Second quarter earnings season kicks into high gear this week with dozens of major companies reporting. First up, Bank of America, which turned out more profits and revenue in the second quarter after a surprisingly strong showing from Wall Street and its consumer businesses. Net income jumped 19% from a year ago. Revenue rose 11% to $25.2 billion.
Thanks, Erica. It's getting harder for Americans to get loans as lenders have become more cautious due to rising interest rates. According to the Federal Reserve, more than 1 out of 5 loan applicants were rejected over the past 12 months. That's the highest denial rate in 5 years. The highest rate of rejection is for people with credit scores under 680. Greyhound has reported some good news. The bus company says that ridership increased over the July 4th holiday by 63% from last year. Memorial Day weekend was even better, ridership increasing by 70% year over year. The University of North Florida professor tells the Wall Street Journal it's due to, buses are it's a good way to avoid the airport hassles as well as higher ticket prices. Those are the company stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages mixed right now. S&P 500. You have 8 of the 11 major industry groups. They are in the green. Energy, the best performing industry group right now. And real estate is proving to be the biggest drag right now. The latest batch of economic data coming in below expectations. And traders now fully pricing in a quarter-point hike in interest rates by the Fed when they meet next week. And then you have the earnings. Bank of America, surprise gain from the core businesses. Morgan Stanley suffering a slowdown in trading investment. Charles Schwab shares advancing, executive there, suggesting the worst is over for the brokerage following an exodus of bank deposits. Of course, the experts will follow me with a detailed look on all of that. Lockheed Martin raising its full-year outlook, signaling a return to sales growth after battling disruptions from their suppliers. Right now, the S&P 500, 15 points higher. That's a 0.4%, 45.38 on the index. Dow Jones Industrial Average up 363 points. That is a 1% gain, 34,947. The NASDAQ 100, 47 points lower, and that is down 0.3%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Madison and Paul.
All right, John Tucker, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. We are streaming live on that YouTube thing. Just head over to YouTube. It's on the internet, I understand, and search Bloomberg Global News, and you'll find the feed there. Let's talk big banks right smack in the middle of earnings season for the banks, the regional banks, the big money centers, all reporting numbers here. So let's roundtable this thing like we like to do. Allison Williams, she joins us via Zoom, and Herman Chan, we got him lassoed here into our Bloomberg studio here in New York. Herman, let's start with you because you were the source of all this problem several months ago, you and your regional banks. Yep. Big super regional bank reported today, PNC, the stock's up.
Yeah.
What are you seeing from PNC?
A bit of a surprise. I think it's just PNC is getting caught up with some of the more positive tone from some of the other banks that reported today. But for PNC itself, the earnings missed estimates, and the guidance was a bit weak relative to both net interest income and some other areas. So it's a bit of a challenge for the regional banks. I think this will be sort of reflective across the group where deposit costs will continue to rise. Banks will continue to offer weaker guidance with respect to net interest income. Loan growth is going to be a bit of a challenge for the regionals because they don't have a lot of the areas that are growing like credit cards. So it's going to be a bit of a slog over the next few quarters.
Well, it seems like wealth management is the thing that's kind of keeping a lot of these banks from having less than great earnings this season. Allison, to what extent do you think that the wealth management side of these firms is going to be able to keep them from experiencing more of these headwinds from things like deposits and money market funds?
Trend for wealth management. Certainly for Morgan Stanley was very strong. The flows came in better than expected. Their fee-based flows better. Investment management flows also better. And in fact, revenue for them also came in a bit better. The net interest income side within wealth tends to feel a little bit more pressure than some of the core business. And that really is because those customers are a little bit more price sensitive. The balances are higher and the cost of deposits tends to rise faster there. But I think what we're seeing across the banks, if anything, is a little bit of a relief rally in the sense that deposit costs are going up. We are seeing that migration, but it's not as bad as feared. Bank of America did come in about in line, so that was not as positive as what we saw at JP Morgan and Citi. But they did up their guidance for next quarter a little bit. And so I think that's a key positive and is helping the shares a little bit today.
Hey, Herman, what have you heard so far, and what do you expect to hear about? I know you mentioned, and Allison mentioned, the cost of deposits going up, obviously. But how about just the deposits in general at these regional banks? There's concern that they'd be losing deposits. What are you hearing so far?
Yeah, so deposits, actually, the overall balances have been pretty stable if you look at the reporting. But what's interesting is the remixing of those deposits. So the non-interest-bearing accounts, those are continuing to fall. So they're falling by 6% across the group so far that have reported. And that's just indicative of the repricing pressures as folks that have checking accounts, they're moving their money to CDs, and so the banks have to pay up for those. So that's another reason why we're seeing headwinds across the group.
But it doesn't necessarily feel to consumers like they're getting a lot of bang for their buck when it comes to these deposits. Do you think that we're going to need to see a Bank of America offering better returns for people to keep their money in their bank accounts?
Well, the banks are not going to give you the money, the higher interest rate. You have to take your money out of your deposit accounts to open up a CD. So it takes a bit of some wherewithal from a consumer to do that. And the banks are just banking on folks just keeping their money in their checking accounts. So that's really the dynamics that's playing out right now.
Hey, Allison, what are we going to see from Goldman Sachs tomorrow? What will you be looking for? What do you think the market's looking for?
So we are going to see some charges at Goldman Sachs. We saw some severance costs at Morgan Stanley today. We're also going to see that at Goldman. And we're also going to see the higher impairment. So that's definitely going to lead to some pressure on the reported numbers. On a core basis, trading fees are down, and despite things coming in a little bit better than expected, and there's talk of a constructive view, that revenue is going to be lower for Goldman Sachs. They are the revenue leader in M&A, and that's a big headwind for the quarter. So for the bank, we're really going to be looking to see how they stacked up competitively on those revenue trends, and then costs beyond some of the items I talked about. What is the core trend there? Because they really are working to improve their efficiency.
Allison, is there? Am I imagining this, or is there any pressure from shareholders or any other external stakeholders on David Solomon right now, given maybe what happened with the consumer bank, for example?
I mean, I think there's a lot of talk and headlines around the consumer bank, but keep in mind that was not started under his purview. So it was something sort of that he inherited. And it was, they took a shot. It was something different for Goldman Sachs. I would say that investors never really had a lot of faith in that strategy. It's certainly not why people bought the stock. It was more something that they tried out and could help over time. they are continuing with the consumer deposit side of the business. So there is, something there, but certainly the lending strategy is something that they've decided is just not something they're going to move forward with. They don't really have the competitive advantage there.
And when it comes to the consumer, Herman, I want to bring you back in here because we talked a lot about the impact of credit tightening on consumers, small businesses. So far with the PNC earnings, are we getting any indication as to how tight the credit is getting for those smaller consumers, small businesses across the country?
Yeah, so we're seeing actually consumer growth still fairly strong across the board, and where the demand has fallen a bit is on the business side and the commercial side. And Allison's banks have seen some strength in credit card lending, so that's something that is helping some of the money center banks relative to the regionals. But the tighter underwriting is probably going to happen more on the commercial side of things, which really is a detriment to the regionals because they are more focused on commercial lending.
Allison, are we seeing any share shifts in, I think about the classic fixed income trading businesses? Are we seeing any big shifts there? Or is it still kind of Goldman Sachs, Morgan Stanley, Bank of America, the big players?
I mean, it still is the big players, but what we have seen, over the last decade or so, is market share gains from the largest U.S. competitors. In this particular quarter, Bank of America is really the standout, showing more resilient 10% growth. However, I would also point out that Morgan Stanley and Goldman Sachs, who still do well in the commodities business, are up against a really tough comparison. Morgan Stanley, coming in even worse than had been expected. But if you looked, I think, across the different verticals, the big getting bigger, and Bank of America really, I think, seeing the fruits of some of their investments in terms of the rates trading business and equities trading business.
Allison, really quickly here, though, with Bank of America, the bond losses hitting $106 billion. Is that going to weigh on the bank moving forward, heading into the next quarter?
I think that the bank has sort of, keeps giving a lot more granular information about its bond portfolio. Certainly, that's just going to take time to manage down over time, and I think that the fact, as we learned with these banks, it's not just about the losses that you carry, but it's sort of about the strength of the deposits and the asset liability management that supports them. And what we are seeing at Bank of America, deposits down with the industry, but certainly that broad-based strength, and especially on the new account side.
All right, guys, what you just heard is some smart analysis from some of our leading voices at Bloomberg Intelligence covering the banks. Allison Williams, she covers the big global banks, the investment banks. Herman Chan covers the regional banks, which have really come into focus really over the last several months. And we love getting those two smart people together, help us kind of walk through what's happening out there with the banking system. So Allison Williams and Herman Chan, thank you so much for joining us here. The market, boom. We're up 0.3%, but the story's in the Dow. United Healthcare seeing an upgrade there and moving the Dow Jones Industrials up 350 points. We are on 35,000 watch. Right now, let's head down to Washington, D.C. World and National News with Nathan Deeger.
Paul, former President Donald Trump says he is a target of Special Counsel Jack Smith's January 6th investigation. The former president announced it in a Truth Social post, saying he got the notice Sunday night and was given 4 days to testify before the grand jury. We spoke moments ago with Bloomberg Law host June Grasso right here on Bloomberg Markets.
This is the second time they've sent a letter like this to Donald Trump, and I think it is what Jack Smith was tasked with doing, which was investigating the classified documents and investigating the January 6th. So he's acting as any prosecutor would in that position.
Bloomberg's June Grasso notes the former president is already facing dozens of federal charges in the classified documents probe. An American soldier is being detained in North Korea. A U.S. official confirms to Bloomberg News the American crossed over the border from the heavily fortified joint security area where diplomats meet in the demilitarized zone. This is the first American to be detained in the North in nearly 5 years. The UN agency in charge of security in the border zone says it is working with North Korea's military to resolve the incident. U.S. climate envoy John Kerry is in the middle of 3 days of talks in China, trying to work together on global warming. At the same time, Chinese President Xi Jinping is saying his country will chart its own path on cutting emissions rather than following other nations. Chinese state television reports President Xi addressed a national conference on environmental protection today. Former Secretary of State Henry Kissinger met today with China's Defense Minister Li Shangfu. It's the 100-year-old diplomat's first known trip to Beijing since 2019. China has blocked its defense minister from speaking with U.S. Defense Secretary Lloyd Austin over sanctions that were imposed in 2018. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The financials helping lead stocks higher today. This comes after the results from Bank of America and Morgan Stanley that boosted the bank shares. Meantime, Amy Wu Silverman at RBC Capital Markets was asked today if the rally in stocks is starting to broaden out.
I actually think you are seeing that already in the options market. You know, we kind of take that metric of call exuberance. You know, where are folks buying single stock call options? And of course, that was in your NVIDIAs and your Apples and your Googles, not too surprisingly, a couple weeks ago. But we've really seen that expanded.
And traders fully pricing in another quarter-point rate hike from the Federal Reserve. They meet next week. Mixed economic data today. Retail sales rising for a third month in June. You had online sales and electronics leading the gains there. Auto sales also increasing. Industrial production, that declined for a second month in June. Right now, the S&P 500, 16 points higher. That's up about 0.4% at 4539. The NASDAQ 100, 22 points lower, pairing some of the earlier losses, down 0.1%. Dow Jones Industrial Average up 1%, a 356-point rise. I'll wrap up with this. New managers can be the stuff of nightmares for office workers. This according to a just-out study. 1 in 5 employees lose sleep over newly minted managers with inadequate leadership. I'm not naming any names here.
Don't make eye contact with me, JT.
More than a third cited anxiety and other effects of an unprepared rookie manager. Reasons for wanting to quit their jobs. You know, in 30 years, you don't have many managers I've been through.
I'm not prepared to handle this conversation because it's giving me the giggles. It's so funny. Of course your manager gives you anxiety, you know?
But the good news is you've had one boss.
That's true.
That's right.
True.
Well, yeah, kind of.
You know,
right?
Yeah, exactly. There's a little
Disappeared
sojourn there.
for 12 years.
Yeah, but other than that. All right, John Tucker, thank you so much. We appreciate it. All right, Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. I love biotech stocks because they are, it seems like it's a binary situation. You hit it, and a boom, or you don't, and then it goes to zero. I mean, I do not have the stomach to trade these things, but a lot of folks do, and they do it successfully. But one of the biotech companies, biopharma companies, is Recursion Pharmaceuticals, and we have the CEO, Chris Gibson. He joins us. He's the CEO and co-founder of Recursion Pharmaceuticals. Hey, Chris, thanks so much for joining us here. First of all, tell us what you guys do. What's your focus at Recursion?
Well, thanks, Paul. Hi, Madison. Yeah, our focus is to eliminate that bimodal worry that you just talked about, Paul. So we're bringing together the worlds of automation and computation to try and turn this artisanal, bespoke process of discovering medicines that takes 10 to 15 years and costs billions of dollars for each new approved drug, and turn it into something that looks more like an assembly line, that's much more predictable, that has much lower failure rates. And so we're using the latest in ML and AI that we build here with our team, using a lot of robots to do our experiments, and exploring and mapping biology to try and discover new medicines at scale and one day bring down the price as well.
Okay, so you know what I have to ask you about is the investment from NVIDIA. I got to hit it at the top here, $50 million private investment. And I had covered Recursion slightly previously, but I hadn't looked into your company as much, to be honest, until the news of that deal. To what extent do you see that infusion of investment as a game changer for what you're going to be able to do moving forward with Recursion?
Well, look, I think what's important for us about the investment and partnership with NVIDIA is that we've been working together with them for the past 3 or 4 years. We run one of the fastest supercomputers in the world. I think it's number 130 or something in the fastest computers in the world right now, and it's built on the NVIDIA infrastructure. And what I think this does is more signals to the rest of the world that NVIDIA is excited about the biopharma market and that they see us as a leader and someone to partner with. And so we're very excited to not only continue discovering new medicines internally here at Recursion, to continue our partnerships with Bayer and Roche Genentech in the fields of fibrosis and neuroscience, but now with NVIDIA to actually start to take some of the neural networks that we're building here at Recursion that we apply to our own data and to actually serve those on their marketplace, BioNemo, where other pharma companies who aren't yet our close partners can actually start to access those neural nets to advance their own research. And so we're very excited about that collaboration.
More broadly, I wonder if you think that AI and the mania around AI is enough to help the biopharma industry kind of recover from some of the Fed rate hiking impacts and headwinds that have impacted your industry over the past couple of years.
Well, look, it's always hard in biopharma because our revenues are so deferred. And as Paul mentioned at the beginning, it really in the past has been pretty bimodal, especially for startups. But I think in this particular case, ML and AI is starting to give people an appreciation for how that could change. And, 3 or 4 years ago, even we in the biopharma industry hadn't fully accepted the potential of ML and AI. But Recursion was founded almost 10 years ago specifically to bring these tools to bear. And like many founding stories, this is a company I founded out of graduate school. We were really going against the current in the early days. I would say now, in every executive team in biopharma of the largest companies in the boardroom, all of them are thinking about the ways that ML and AI is going to change this industry. And they're looking to companies like us who've been doing this for years to give them clues as to which direction things are going. Will it pull us out of the broader macro cycle? I have no idea. I learned a lot from our board chair, Martin Chavez, who said not to make predictions about the future of the market, so I won't do that.
All right, Recursion Pharmaceuticals is a publicly traded company. RXRX is a very cool ticker symbol. It's got a market cap of $2.6 billion. Stock's up 76% year to date, in large part on that investment by NVIDIA. Anything NVIDIA touches seems to turn to gold here. So just to understand your company, Chris, does Recursion develop any drugs, treatments on its own, or do you license your technology to other biotech companies?
All of the above, Paul. So we've got 5 drugs in clinical trials right now. 3 of those are in phase 2 or phase 2/3 trials. In fact, we fully enrolled our first phase 2 trial just a few weeks ago. We focus internally on rare genetic diseases and precision oncology, where a company of our size and scale could run 5, 6, maybe one day 10, 20 clinical programs. And then we partner with large companies like Bayer and Roche Genentech to go after huge intractable areas of biology like neuroscience, where you really need the capital, the resources, and the expertise of a large pharma company to go after, Alzheimer's, Parkinson's, some of these big neuro diseases. And then I think what's exciting people recently about the NVIDIA news is there's now this third value driver. Beyond our own pipeline, beyond our own partnerships to discover medicines, we're now starting to leverage some of the tools we built for ML and AI to look at a different part of the demand curve and start to partner with the rest of the biopharma industry to leverage our tools on some of their own data. And there will be more coming about this in the coming quarters, but certainly that's the plan with our friends at NVIDIA.
Talk to me about something that my mom would want to know that AI could help with when it comes to drug discovery.
So today, scientists are trying to understand this incredibly complex space of biology and chemistry using really, really old tools. And what we're doing at Recursion is the equivalent of building Google Maps, but for biology. So instead of focusing on one disease at a time, we're looking at every gene in the genome and millions of molecules in many different human cell types using robots and sophisticated computational tools to literally give a map on a web interface for biologists and chemists to use. And it will look very much like Google Maps, but instead of looking at a street, in your neighborhood or looking at a street view of a restaurant that you want to go to, this map will give the equivalent of that to biologists and chemists to understand things about biology and chemistry that until now we haven't been able to see, to understand the complexity of all around us. And we think by providing that map, people will be able to better plot the course from disease to healthy, not just for one disease at a time, but for many. And that's what we've been working on for the last 10 years here at Madison.
All right, Chris, fascinating stuff. And I guess, when you get your undergraduate degree in bioengineering and biomedical engineering from Rice University, and if that's not enough, then you go get a PhD in bioengineering from the University of Utah, you better do something really important, and I think that's what these folks are doing here. Chris Gibson, CEO and co-founder of Recursion Pharmaceuticals. The ticker is a great ticker for a drug maker, RXRX, and doing some interesting work there, really interesting work in the biopharma space. So we appreciate getting a few minutes of Chris's time. Market continues to grind a little bit higher here. S&P out, now up about 0.5%, moving a little bit higher, and we will keep track of that. The Dow up over 1%. This is Bloomberg. All right, let's get some company news right now with Dan Schwartzman.
Hi, Paul and Madison. Bank of America is showing impressive gains as second quarter profits soared due to surprise gains brought in by fixed income and equity traders. Those gains were able to mask a slight miss in expected net interest income, which still came in at over $14 billion. Bank of America's deposits, though, did fall over 1.5% to $1.88 trillion, which was less than the 3% drop analysts had predicted. BlackRock says Saudi Aramco Chief Executive Officer Amin Nasser is joining its board. That story from Bloomberg's Charlie Pellet.
It reflects the asset manager's commitment to the Middle East as part of its long-term strategy. CEO Larry Fink said in a statement, Nasser has led the world's biggest oil producer since 2015, including overseeing its public listing, and provides BlackRock with, quote, a unique perspective on key issues facing the company and its clients. According to data compiled by Bloomberg, BlackRock, the world's biggest asset manager, has a $2.4 billion interest in the oil producer. In New York, Charlie Pellet, Bloomberg Radio.
Thanks, Charlie. Morgan Stanley's second quarter earnings were hurt by slowdowns in investment banking and trading, the trading unit slipping by 22% from a year earlier, which led to results that were weaker than analysts had predicted. The good news for the New York-based firm was that wealth management set a record for net revenue with $6.66 billion. That's up 16% from last year. Morgan Stanley, though, did have to pay out $308 million in severance costs to the more than 3,000 jobs it eliminated earlier this year. Those are the company stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills and Paul Sweeney here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Just head over to YouTube and search for Bloomberg Global News here. Looking at the markets, S&P up 0.5%, Dow up over 1%. We'll take that. NASDAQ lagging a little bit, up 0.25%. Yields that come in just slightly. Got the 10-year Treasury down about 3 or 4 basis points, 3.77% on your 10-year. Oil higher. WTI crude oil up 1.6%, over $75 right now per barrel. Keep an eye on that. Right now, let's head down to Washington, D.C. We will get world and national news with Nathan Hager.
Paul Sweeney, former President Donald Trump says he expects to be arrested soon in the Justice Department's January 6th investigation. The former president put a statement on his Truth Social account saying he got notice Sunday night that he is a target of special counsel Jack Smith's probe and was given 4 days to appear before the grand jury. We are already getting reaction from Republican Congresswoman Marjorie Taylor Greene.
It's unbelievable. It's hard to even recognize that this is our country. The American people are going to be furious.
And Pangea Policy founder Terry Haynes says this will have a political impact.
It will tend to energize supporters, but it will also end up sinking him with anybody else.
Pangea's Terry Haynes was on Bloomberg Surveillance. This news from the former president comes on the same day his lawyers are preparing for the first pretrial hearing in the other special counsel case that's into the former president's handling of classified documents at Mar-a-Lago. A U.S. soldier is being held in North Korea. A U.S. official confirms that to Bloomberg News after the United Nations said an American national had been taken into custody after crossing the border from the heavily guarded Joint Security Area. Now, this is the first time an American's been held in the North in nearly 5 years. It comes with tensions on the rise. North Korea did test fire intercontinental ballistic missiles in recent days. The search for a 2-year-old girl and her 9-month-old brother in a Pennsylvania flash flood is now in its 4th day. Matilda and Conrad Shiles were visiting family in Bucks County from Charleston, South Carolina, when authorities say a wall of water swept away their family car. Police in Upper Makefield Township say about 100 people, drones, and rescue dogs have combed the area near the creek that turned into a river on Saturday. They're planning to hold a news conference this afternoon. Taylor Swift is turning to a high-powered litigator in Washington to be the next general counsel of her 13 management. According to the Wall Street Journal, Douglas Baldridge, partner at the D.C.-based law firm Venable, will start his new role in the fall. He'll be replacing Jay Shoddy's, who's retiring. Baldridge has worked with Taylor Swift before. He represented her in a much-publicized sexual harassment trial that she won against an on-air radio personality back in 2017. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager in Washington. This is Bloomberg, Paul and Madison.
All right, Nathan Hager, thank you so much. We appreciate it. Are you a TikTok?
Oh, you know I am, Paul. I feel like we've talked about this.
We might have. That's why I turned to you in this thing, because there's a story out here. It's pretty interesting on the music side of TikTok.
Yeah, Warner Music Group and TikTok, a big partnership deal announced today. Warner basically we don't know the details of the agreement, of course, but this is a multi-year deal between the two, and the app is going to have access to Warner Music's repertoire, songs, etc., and that's going to allow creators to continue to use music from artists that work with Warner Music Group for free, essentially.
So, I mean, this is a way, presumably, that, folks that use Warner licensed music, the artists and songwriters can actually get paid for it.
Yes.
Now on TikTok. So, I mean, this is good for, presumably, the artists and songwriters, and also for Warner Music Group, which is a public company. Yet again, it was public, taken private, now public. Yet again, WMG is the ticker.
Yeah, and it's up about 0.7%, popped a little bit more than that earlier today on the news. But this follows an interesting test that TikTok did in Australia earlier this year, where they tried to limit the amount of mainstream music that creators could use on their videos in an effort to prove to labels that the music wasn't, the thing that was driving a lot of eyeballs. So it's interesting to see this deal here.
All right, Warner Music Group, TikTok coming together with a deal. Maybe everybody gets paid. We'll have more coming up. This is
This is Bloomberg Markets with Paul Sweeney.
I'm looking at just brutal losses in the fixed income markets. What's happening in the commercial real estate biz? Do we have a problem? How big is it going to get? But it seems like people want a job, they can get a job. You can't have a recession in that kind of scenario, can you?
Breaking market news and insight from Bloomberg experts.
Banks have to either raise capital or shrink their balance sheet.
Pricing power remains strong.
The best way to predict what the Fed's going to do is think about what they should have done a year ago.
Jay Powell's never going to say never.
Bloomberg News breaking down all the market action out there.
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up, busy hour on the books coming up right now. We're going to check in with Bailey Lipschultz, get a sense of what's happening with this market. Then Jen Rhee, senior antitrust analyst with Bloomberg Intelligence, is going to join us. I think this Microsoft Activision deal, the $69 billion deal, I think it's going to get approved and get through. We'll get the latest there. And then we're going to talk to Matt Palazzola. He's the senior insurance analyst at Bloomberg Intelligence. Why? Because it's hurricane season, and that is a big, big issue for these insurance companies. We'll get the latest about how they plan to deal with it. But first, let's kick this hour off with a Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much, Paul Sweeney. All about the bank's best level of the day. We've got the S&P now up 23 points at 45.46. That is a gain of 0.5%. Right to the numbers here because the Dow now up 377, a gain there of 1.1%. NASDAQ Composite Index up 50 points, higher by about 0.4%. The Russell 2000 outperforming, also up now by 1.1%. Dow Transport's up by 2.1%. We've got the 10-year yielding 3.76% with a 2-year at 4.72%. Spot gold now up $23 the ounce. Gold at $19.78, up by about 1.2%. And West Texas Intermediate crude up 1.6%, $71.35 right now for a barrel of WTI. Bottom line here, stocks moving higher, banks leading the way. Morgan Stanley up the most in 6 months after company executives said the worst may be over for the firm's trading and investment banking slump. We'll have more with CEO James Gorman coming up in just about 90 minutes right here on Bloomberg Radio. Bank of America's second quarter profits soared after its core Wall Street businesses exceeded analyst expectations. Bank of America now up 4.6%. Allison Williams is a senior banking analyst with Bloomberg Intelligence, and on surveillance this morning, she talked about what is going right at Bank of America.
They do have some strength on the credit side of things that did really well this quarter, so their fixed income trading business doing very well. But also they've been making investments there. They've been making investments on the rates trading side of the business. They've been making investments in equities.
And again, Bank of America up now by 4.5%. Morgan Stanley is up now by 6.4%. Also after earnings, we've got PNC Financial Services up now by 2.8%. Recapping, a bank-fueled rally underway. S&P up 22, now up by about 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Definitely, as Charlie just mentioned, a bank-fueled rally in the market. And leading that way is Charles Schwab. Its stock is just ripping here. Bailey Lipschultz, he covers all the markets for us. He joins us here in Bloomberg Interactive Broker Studio. Let's lead with Charles Schwab. That stock is up 12.5%. Wow.
Yeah, topping expectations despite continued challenges as they kind of provide month-by-month updates based on kind of money leaving. But when you look at some of the comments coming from management, executives talking about deposit growth expectations by year end. So as much concern as was kind of hitting the stock and had hit the stock again back in March when it went from essentially $76 down to below 50 through May.
And I remember at the time we were all sitting here and maybe talking with Herman Chan from Bloomberg Intelligence and saying, why is Schwab going down? I mean, does anybody think that business is at risk? I mean, that's Schwab, you know? And sure enough, that was a trade. If you had the gumption to go buy that stock down at $50, boy, you're getting paid.
Well, and that's kind of why it's interesting that you saw obviously you saw the sharp sell-off in the start of March, but it continued to drift lower. Yep. And I think a lot of that was just people got excited and wanted to buy the First Republic dip, and then that blew up in their face. So it's kind of you don't think Schwab is going to go anywhere. They have so many businesses and such a strong portfolio of offerings that obviously now it's playing out quite well, but at the time, very queasy opportunities.
I remember saying to Herman Chan, if I were an analyst at a hedge fund and followed the banks, I would go into my PM and say, hey, give me some more capital, because I think a lot of really good banks are getting thrown out with some of these, and whether it's a PNC or a Schwab or an M&T bank, and buy a basket of those things. And it's tough to do that, but that's kind of what you felt like a month ago.
Well, that kind of comes back to the whole, when you talk to a lot of portfolio managers, buy when you feel sick, sell when you feel good, right? Because it's obviously very exciting to keep piling into some of these high-flying stocks. NVIDIA up right now, again, another %. But when it's looking choppy and looking rough, that's what
tough.
Works.
That's a young person's game, as I always say.
Well, it's fun to say when we're talking on radio and not managing people's retirement.
Right, we don't have to actually do this. But it is interesting, to your point, Paul. I mean, if you look at financials today, it's the second biggest leader on the S&P in terms of sectors. And we keep anticipating these bank earnings to have a negative story coming out of them, and they keep having kind of an upside surprise there, Bailey. What else are you looking at when it comes to not just bank earnings, but throughout this upcoming earnings season? What are you excited about?
We're going to see really where the consumer stands. And that, I think, is going to be interesting. I think it'll be interesting to see what happens with a Netflix, with a Tesla coming after some of those pricing cuts. One thing that, just to come back very quickly to banks, that was fascinating was this morning Morgan Stanley was trading in the red. It was basically unchanged. Now it's up over 6%, looking like it's on pace for the best post-earnings move since 2020.
Wow.
So there's a lot of excitement seeming around the banks and the optimism that some of these management teams are striking. And when you look at the market right now, obviously Microsoft is leading the charge after that AI news, but your leaders for the S&P 500 based on the MOV function, Microsoft, UNH, NVIDIA, Schwab, and Bank of America. So actually a mix, as opposed to what we've typically been seeing, which is the big Magnificent Seven driving the market. And now you're seeing some strength showing up for the rest of the market, which has kind of been that whole catch-up argument.
And that's kind of where I was going to go. It feels like if I'm a portfolio manager and I came out of June 30th and I wasn't fully invested, man, I feel like I have to play catch-up in the back half of the year. And maybe I go to look for some of the names that have underperformed, a little cheap. Maybe I try that route as opposed to trying to catch the next move up in Apple or Amazon or something like that. So maybe that is fueling a little bit of the broadening out of the markets.
Well, and that's one of the things that I think folks have been pitching over the last month was this by the equal weighted ETF. So you look at the Invesco ETF, which is RSP, you look at those inflows, pretty much standard inflows since the beginning of June. Highest one-day inflow, according to the Bloomberg terminal, back in June 20th, almost $850 million. So people are putting money to work and looking outside that Magnificent Seven. I don't think they're necessarily pairing exposure, but if you look at results and you look at what's moving today, if you weren't buying these big banks, at some point you're going to have to do something.
And could we see a pop in the equal weighted S&P in the second half of the year too, and potentially a downside in the overall S&P, Bailey?
Well, I think that's the big question, right? Like, you're already right now, the whole pitch going into really coming out of March was, well, the equal weighted ETF hasn't caught up. So while you do have the NASDAQ 100 continuing to near really breakouts and back to those levels, the RSP, at least when you look at it on that basis, you're still below where it was back in February, and you're still holding decently below where it was back in January 2022. So there still is room to run for the others, whereas broadly speaking, again, NASDAQ 100 still not at all-time highs back from November 2021, but it does still seem like at least the folks I talk to are looking for those other opportunities outside of the Magnificent Seven.
And if I'm an IPO banker, I'm on the phones heavy right now.
Heavy.
Calling all my clients saying, let's hit the market.
Yeah.
Are you surprised we haven't seen more, Bailey? Or do you see, when you look at the calendar, do you see anything heating up?
We've got another one coming that should price this evening. Oddity Tech, maybe you're familiar, Madison, with Il Maquillage. They're a makeup platform.
Oh, what makes you think I would be familiar with my favorite lip mask in the entire world?
Exactly.
Bailey?
So you should be covering the IPO, because at first I was like, I don't know what this is.
No, I'll get you read in, Bailey. Don't worry. We'll talk. I'll bring you the mask.
Deals are percolating, Paul. I think it's going to be we'll have maybe a few over the next month, but I think it's going to be an interesting back half of August, gearing up for post-Labor Day.
Yep. All right. I'm going to just walk along the beach in the Jersey Shore and talk to all my banker buddies and say, off the beach, guys, get back to work. Let's get some IPOs cranked up for September. Because this market, I mean, the S&P's up, 18%. I mean, what else do you need? Bailey Lipschultz, he covers all the markets for Bloomberg News, and we appreciate getting him here in our studio. Microsoft Activision, I don't know. Deal makes sense to me. I never really had a problem from a regulatory perspective, but our friends in England, I think, still do. But Jennifer Rhee, she is the expert. She's a senior antitrust litigation analyst for Bloomberg Intelligence. She's been following this deal very, very closely in all the various jurisdictions. She joins us live here in our Bloomberg studio. Jen, is this deal going to get done? I think it's going to get done. Where are we?
Yeah, at this point, this deal's going to get done. I mean, it's been an unbelievable roller coaster, right?
Right.
What a crazy, basically, year and a half, and it's too bad for them that you weren't the head of the CMA in the UK.
I know.
Oh,
well said,
Exactly.
Or even me, because
Right.
I never saw antitrust problems with this deal from the beginning either. So at this point, it looks like, to me, the UK is saving face a little bit. You know, now pretty much 39 to 40 global jurisdictions have cleared the deal. The Federal Trade Commission lost in court every effort right now to stop the companies from closing in the US. So there's some new restructured deal being offered up to the CMA. I kind of think of it as a new remedy more than a restructured deal, having to do with maybe offering up some rights to the cloud gaming business, to some of the assets of Activision to a third party in the UK. But they're reassessing that, and they need about 6 weeks. And they'll make a decision after that.
Is that the deadline that's coming today that they're not likely to meet, or is that a different deadline?
So the deadline today is the final merger end date, and they will not meet that. They won't close today. Now, the thing is, it's not a magic day. The deal doesn't terminate. The deal exists. All today does is allow either party to walk away from the deal without breaching. They would have to put in notice of termination. But if neither terminate, which at this point would be crazy if one of them did, they're going to get cleared and they're going to be able to close, then they wouldn't be breaching the contract and they could walk away. Now, it's a little risky for Microsoft just to leave it out there like that, allowing Activision to walk away at any minute. So I think they're probably renegotiating, and they'll extend that end date. But at least if neither terminate today, the agreement's still good.
And by the way, Microsoft has hit an all-time high today.
Wow.
And probably in part due to this news, but also due to they've released some prices for their AI products, which the market likes. So if you're looking for an AI play, that is one of them. So what does this tell you, Jen, about, if you were advising your clients about deals, what did you learn during this process for Microsoft and Activision and some of the other big deals that are being reviewed? What's kind of the lay of the land these days?
I will tell you, Ed, I think there's a real clear pattern emerging that isn't good for the regulators. And that is that if companies do have an issue, some sort of a problem, antitrust problem, but they walk into court with a really reasonable fix or remedy that the regulators have rejected, the judge is probably going to accept it. That's one thing we're learning.
Is that something new? Is that something that hasn't necessarily been done that
Yes.
frequently? Okay.
Because it used to be that the agencies would accept these settlements.
Okay.
But, at some point in time, both the DOJ and FTC said, you know what? No, if the deal's problematic, we just want to sue. We're not going to settle these things anymore. But the thing is, the companies, the judges are still willing to look at these settlements. That's one thing. The second thing is that if you have a deal that the agencies will have to pursue using a novel theory, a theory that hasn't really been tested or that hasn't worked in court in a really long time, the judges aren't really changing. They're not changing their perspective. They're still looking back at the old precedent and the old way things are done, and they're simply not accepting these sort of novel or unique or broader theories, and the chances of the agencies winning in court aren't good. So the companies, if they get challenged under a theory, I think they should go to court because they have a good chance of winning.
Does it make regulators look kind of wishy-washy?
I wouldn't say it makes them look wishy-washy because they are doing what they said they were going to do.
Okay.
Right? They said they wanted to broaden out antitrust laws, and they said they wanted to bring tough cases to court. But it makes it look like that strategy is simply not working.
Got it. It's not preventing deal making, obviously.
It isn't preventing. Now, there have been some successes because what the pressure has pushed some deals to abandon, because some deals just don't want to go through the litigation or can't last that long. And so that is a success for the agencies. If they think a deal's problematic and they sue and the companies walk away, it's a success because the deal didn't happen. And that has happened actually quite a bit for the FTC, particularly in hospital deals that they've challenged. But in terms of actually going to court, getting good precedent, broadening out the approach of the antitrust laws to deals, they haven't been successful.
All right, so it looks like the Microsoft Activision deal is going to get done. What else are you looking at? What else is the legal community looking at right here?
Oh, there's so much happening. It's just in the last couple days, the breaking news on deals. So 2 companies trying to merge, Intercontinental Exchange and Black Knight, had been sued by the FTC, and that hearing was supposed to start July 24th for a preliminary injunction. But just yesterday, they sort of sweetened their remedy offer. They had offered to divest assets. They've offered to divest more assets.
Okay.
And as a result of that, the FTC and the companies put in a motion to court asking to postpone that hearing. It's been postponed to August 14th, and it looks like they're talking settlement. So that's a pretty big deal, because as I said, this agency hasn't really been willing to settle very much. And it looks like ICE and BKI may salvage their deal this way, because I didn't actually have high hopes for them in court otherwise. So we have that going on.
Okay.
We're waiting for the Amgen Horizon trial to start. That's in September. That is, as I mentioned, a novel, untested theory. So I don't think that the FTCs will be successful there.
How long does like a trial, like for an M&A deal? Is there something quick, or does that go on for a long time?
Well, it's different depending on whether it's the FTC or the DOJ. So for the FTC, it's really quick, because they're only going into court asking for a short-term block on a deal, because they assess the actual antitrust merits of the deal in an internal court that takes a long time. And they're simply trying to get a block so they can get their internal process done. The DOJ, on the other hand, has no internal process. So when they go to court, they're asking for a permanent injunction that takes a little bit longer.
So Microsoft Activision, then, just to end on that, 6 weeks, you think, is the timeline?
Yes, that we know it's the timeline, because there was a hearing in London yesterday, and the CMA representative said they need about that time to reassess. Although the companies may be able to close before that. That's the time they need to issue a final report. They may actually allow a closing before the final report.
And then is it over?
Well, it is over, really, in truth. The FTC could continue to pursue their appeal. I give them less than 5% chance of winning that appeal, but they could still continue to pursue it.
Okay.
Since when did England become like the gatekeeper for global deals?
Since Brexit.
Yeah.
Is that right?
Yeah, they came out and they said, we're going to be a top antitrust regulator now. We're not subsumed within what the European Commission's doing. So they're independent again. They used to be, and now they are once again. And you know, they want to make a stand for themselves.
All right. Well, they certainly did in this case.
Yeah.
All right, Jen Rhee, thanks so much for joining us.
Thank you.
Jen Rhee is the senior antitrust litigation analyst for Bloomberg Intelligence. Illustrating all the great and broad research that Bloomberg Intelligence has. Again, BI Go on the terminal. It's not just stocks and bonds and stuff like that. It's also litigation. We need to get some smart analysis in terms of litigation or antitrust or government policy in D.C. We've got a team for that as well. All of that is available for Bloomberg Terminal customers. Bloomberg Intelligence, BI Go. So some good stuff there. Some good stuff in the markets. I'm calling out the Dow. It's up a solid 1%, 357 points. How about that? We're going to have more coming up. This is Bloomberg. All right, let's do some company news right now with Dan Schwartzman.
Hey, Paul and Madison. 2 major banks opening their books today. Bank of America showed impressive gains as second quarter profits soared due to surprise gains brought in by fixed income and equity traders. Bank of America's deposits, though, did fall over 1.5% to $1.88 trillion. That was less than the 3% drop analysts had predicted. Meanwhile, Morgan Stanley's second quarter earnings were hurt by slowdowns in investment banking and trading. The trading unit slipped by 22% from a year earlier, which led to results that were weaker than analysts had predicted. It's getting harder for Americans to get loans. Bloomberg's Gina Cervetti with more.
More and more Americans are being turned down when they go for loans. A new Fed survey found that the rejection rate for applicants jumped to nearly 22% in the 12 months through June, and that is the highest level in 5 years, thanks to the combined impact of high interest rates and caution among lenders.
Thanks, Gina. There's a reason why your Ralph Lauren polo gear is more expensive. Well, the company believes that if everyone can afford their products, the brand name loses some cachet. Since 2018, Ralph Lauren has raised the average prices of its products by 80%. The company's CEO, Patrice Louvet, says that as long as the company elevates its products, there isn't a limit as to how high prices could go. NBC Universal raising prices on its Peacock streaming service by $1 or $2 a month, depending on your plan. This marks the first time the company has raised prices since launching in 2020. With both actors and screenwriters on strike, television networks are having to get creative with their fall schedule. CBS will be airing the cable hit show Yellowstone from the pilot episode that aired back in 2018. Those are the company stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got financial stocks, banks propelling the way higher for the Dow, the S&P, and NASDAQ at or near session highs, with the S&P up 20 right now. 45.42 on the S&P, a gain right now of just about 0.4%. That index, by the way, so far this year, it is up 18.3%. The Dow up 1% today, higher by 341 points, up today again by 1%. We've got NASDAQ up 49, a gain there of about 0.4%. Bitcoin lower, little changed at 29,930, down $2 on Bitcoin. 10-year yield 3.77%, with a 2-year that's yielding 4.73%. Spot gold up 1.3%, $19.81 the ounce. West Texas Intermediate crude oil up 1.9%, $75.59 a barrel. As I mentioned, financial stocks leading the way higher after results from Bank of America and Morgan Stanley bolstered bank shares despite some consumer-related weaknesses. We do have Morgan Stanley up now by 7%. We've got a conversation with James Gorman, the CEO, coming up at just about 1:30 p.m. Wall Street time. Bank of America, by the way, up now by 4.7%. Again, recapping here, stocks higher, S&P up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Madison Mills, Paul Sweeney here in our Bloomberg studio. Looking out, the skies have just opened up here in Midtown Manhattan,
It's
Madison.
disgusting. I'm having a panic attack. I need to go walk my dog in that trauma of a rainstorm. It's not good. Yeah.
But it makes you think. The weather has been crazy. We've got just crazy heat in much of the U.S., in Europe as well. But you think about July, you start thinking about hurricane season. Yep. And our good friends, all along Florida, the Gulf Coast, and the Southeast. It's also big deal for the insurance industry. Matthew Palazzola joins us here. He's a senior analyst covering property and casualty insurance for Bloomberg Intelligence. Joins us here in our Bloomberg studio. Matthew, what are the forecasts for this year hurricane season? Worse than average, better than average? What are we hearing at this early stage?
So currently we're looking at above average.
Okay.
What was happening is there's the El Nino effect, which I'm only a amateur meteorologist, so I won't get into it, but it essentially winds that suppress hurricane formation. Okay. So that was happening, so we thought, okay, the forecast came out, we're going to have a below average season. But we've been having these incredibly above average sea surface temperatures, which feed hurricane formation. So the forecasts have actually they've shifted now to above average.
But for hurricanes, and then I promise we'll stop with the weather questions, but the landfall calculation is kind of a big deal when it comes to the impact, right?
Yeah, I mean, that's the thing, right? So there can be a very active hurricane season and maybe one makes landfall, and that's the big thing. Or it could be a very inactive season and just one makes landfall. Mm-hmm. We started off really strong, actually. There were two hurricanes in June, in the East Caribbean, which hasn't happened since 1968. So I was having a panic attack in the beginning of hurricane season, thinking we were going to have a crazy year. It's slowed down a little bit. We have kind of one storm out there that's probably not going to hit the U.S., but anything could happen.
So, what do the insurance companies tell you about how they're dealing with this risk, this event risk, whether it's a hurricane or the fires or the extreme heat? What's the industry telling you about the long-term ability to kind of manage these things?
Yeah, they're telling me they're running away from it. As we've been talking about, insurance companies have been leaving Florida, they've been leaving California, and there's climate change. There's also some moral hazard where people are building houses in these places that are prone to catastrophes, and what happens is they keep getting bailed out essentially by the taxpayers, and they keep doing it. So it's not just climate change, it's population density, population values too.
I mean, everybody since the pandemic has been flocking down to Florida or to a lesser extent Texas. A, I don't know where they're putting them all, housing wise, but B, where do you put them that it doesn't put them right in the path of a hurricane? There's nowhere.
You don't. So in Florida, there is what is called the insurer of last resort, meaning you can't get insurance anywhere else. You get it from this company run by the state called Citizens. And the policies that are in Citizens have I don't remember the exact year, but they are at a record high because no one can get private insurance anymore, so they essentially get this government-funded
Because I saw,
insurance.
just before we talk about it, Farmers Insurance is the latest private insurer. What did they do? Did they leave Florida?
So you can't just up and leave generally.
Okay.
So they try to, what they do is non-renew. So your policy comes up again with Farmers, they tell you we're not going to renew it.
Okay.
I would say, interestingly, State Farm, which is one of the biggest in the country, if not the biggest in most places, did say they were going to stay in Florida. One of the problems in Florida was not just the hurricanes. Another thing we were talking about was incredible fraud in the insurance system.
Fraud in Florida, no.
If you could believe it, Paul.
Yeah.
So the state actually took several measures to curb a lot of this, and it's too early, but I think State Farm, kind of affirmed that maybe it helped a little bit.
Why would they stay, though, if everyone else is leaving? I mean, is that enough to make a State Farm stay?
Maybe. We're not sure yet.
Yeah.
The auto business is more profitable than the home. So a lot of times they want to keep that business there. So I think for State Farm, that could be a big draw.
Yeah.
How are the insurers, how are the stocks been trading over the last 3, 6, 12 months?
So beginning of the year, they did actually well. They're defensive names, right? So they're not going to really outperform when we have a kind of tech risk-on environment, which kind of happened, right? And they've also fell out of favor a little bit with, I guess, the banks doing a little bit better. But the fundamentals are good. Valuations are kind of near long-term highs. So we're going into earnings season. I don't see a huge catalyst, in these results for another leg up.
I guess I wonder about these insurance companies because, as we all know here, this is just going to keep getting worse. Like, we're going to see hurricane season after hurricane season continuing to worsen. So what do they need to do to hedge against that? Is the move mainly to leave?
Generally, when you see these large uninsurable risks, they do leave.
Yeah.
I think prices will continue to go up. It's a heavy regulated business, so they can't raise prices as much as they would like, which is another problem in these states. It's not at the point, I think, where they panic and leave everywhere, but certainly in these coasts, I think you're going to see a larger government participation in the industry.
So how about the insurers of the insurers, the reinsurance business? What are some of those names, and how's that business? And if I'm looking to invest in insurance business, do I have a preference, insurance versus reinsurance? How do I think about that?
So right now, it's been described as a once in a lifetime good pricing environment for the reinsurance business, which is insurance for insurance companies. What has happened is all these things we've been talking about. So there's been a large frequency and severity of these massive events. There's been fraud in these states, and the reinsurers essentially put their feet down, so we're stopping. A lot of them just would stop writing business in Florida. In response, the demand went up, the supply went down, so the price went up dramatically. So if you wanted to play this, the reinsurance business has probably been the place to be since the end of last year. Those are names like Renaissance Re, RNR. A lot of them are in Bermuda, and a lot of them, Renaissance Re is really a pure play, and then there's some of them in Europe are kind of the other big players.
So how often are you go to Bermuda to see these companies?
We try to get there as much as we can.
All right. If I were a young person coming out of college interested in financial services, would you recommend they go into the insurance business?
They put me on the spot.
I know. Well, I was just talking. Last weekend I met a young guy, and he was in the insurance business. He worked for Star.
Okay.
The folks that are now sponsoring the Yankees.
Yeah.
And I thought you don't meet many young people in New York that are insurance, but there's a gajillion of them. I just don't cross paths with them, I guess.
Yeah, let me say this. Well, Star, by the way, came out of AIG.
Yeah, I know.
Hank Greenberg.
Yeah, I'm a huge Hank Greenberg fan.
Let me say this. It's an inelastic demand business. It's kind of always going to be around.
Yep.
Maybe it's not the most flashy compared to other things, but I think, this business has gotten, I think, better over time and perhaps more attractive to people going into it. The insurance brokerage industry grows a lot. That's not going away either. So I could see people, perhaps being interested in that.
Yeah.
It feels like credit feels like the big new thing that everyone's going into. Private credit. Yeah.
That is a big new thing. All right. So earnings coming up for the insurance companies. What are you going to be looking for?
So this quarter, again, fundamentals good. There was a high frequency of medium-sized events in the quarter. So catastrophe losses, what they essentially call it, are probably going to be higher than average. So we were looking at low to mid-teens ROEs for these businesses, which is pretty good, pretty peak cycle for them. I think it's going to be a little bit lower. Investment income has been doing well. The rise in interest rates certainly helps all these companies. I don't think there's any huge upside surprises. Maybe they talk about pricing being even better than we thought. I would point out Berkshire Hathaway, not necessarily a pure play insurance company, but heavily levered to Florida. So they leaned into the Florida reinsurance market significantly. They did.
And what was their strategy? Just that we can price the risk?
The pricing went up so much that they leaned into it. There's reinsurance renewal times in specific parts of the year. In January, everyone thought Berkshire was going to lean in hard. They didn't, and then everyone's kind of surprised. So they leaned in later in the year to the tune of about $15 billion of exposure.
Okay. Wow. All right. Interesting. I'll pay attention to that stuff. I'm forcing myself to learn about the insurance business. I just can't get it.
Oh, I don't
I should have
know.
a mental block.
It's a good business.
We need to get a coffee because I don't know what
You could sell me anything.
Yeah.
As a matter of fact, I did get a phone call from my dude recently saying we need to sit down. I said, oh boy, that's going to cost me something.
Yeah.
Matthew Palazzola, thanks so much for joining us. Senior analyst, he covers all the P&C insurance companies for Bloomberg Intelligence, coming into our Bloomberg Interactive Broker studio. Right now, let's head down to Washington, D.C. Get world and national news with Nathan Hager.
Okay, Paul, the legal pressure continues to mount on Donald Trump. The former president now says he is a target of the Justice Department's investigation into January 6th. In a Truth Social post, the former president said he got the notice Sunday night and expects to be arrested and indicted. Bloomberg Law host June Grosso says this is a bigger deal than the other special counsel probe into classified documents at Mar-a-Lago.
This would be based on an attempt to overturn an election, something that we've never seen in this country, and accusing a former president of this. I mean, this is monumental.
Bloomberg's June Grosso reports the former president is not likely to testify before the grand jury. He didn't for the classified documents case. In fact, the first pretrial hearing in that matter is coming up this afternoon. A U.S. soldier is being held in North Korea. We got that word from a U.S. official after the United Nations said that an American citizen had crossed the border from South Korea while touring the Joint Security Area. That's a part of the border zone closely guarded by both countries' militaries. Democratic Congresswoman Alyssa Slotkin tells CNN that zone is one of the most constrained areas in the world, and it is not likely someone could have just wandered off. Florida Governor Ron DeSantis has filed papers to appear on South Carolina's Republican ballot in 2024. He is the first major party candidate to make the move. It comes in the middle of a shakeup that has seen DeSantis trim staff and pare back travel to the early primary states like South Carolina, but DeSantis says his campaign is in good shape.
We were in Iowa last weekend. There's a lot of great stuff going on the ground for us there. We had really the kickoff to the caucus is this Family Leader Summit, and that was very, very positive for us. And so we're just going to continue building that momentum there.
And the DeSantis pivot continues today. He's going to give his first interview to a non-conservative outlet, CNN. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nathan Hager. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. Bank earnings front and center today. Stocks are rallying right to the banks. We've got Morgan Stanley up 6.5%. Bank of America reported this morning up by 4.6%. PNC Financial up by 3.1%. Schwab shares, meanwhile, they are up by 13%. Financial stocks leading equities higher after results from Bank of America and Morgan Stanley bolstered bank shares despite some consumer-related weaknesses. By the way, coming up at 1:30 Wall Street time, we will have an interview with Morgan Stanley CEO James Gorman. Right now, we've got the S&P up 44 at 45.45, a gain of 0.5%. Dow Industrials up 342 points. That is an advance of 1%. NASDAQ up 70, a gain there of 0.5%. 10-year yield 3.77% with the 2-year now at 4.73%. Gold up $24 the ounce to $19.79, a gain of 1.2%. And West Texas Intermediate crude up 2.3%, $75.84 a barrel. So stocks are higher, but what about the broader market outlook? Cara Murphy is Chief Investment Officer at Kestra Investment Management, and she was a guest right here on Bloomberg Markets.
So we've started to see the market broaden out a little bit. Russell 2 is coming back a little bit, seeing some mid caps do better. So that's healthy for the market. So, and there's a fair amount of economic momentum as well. We're still cautious on kind of where we are in the economic cycle, but consumers remain really strong. Balance sheets are relatively hefty. So, in my mind, it's kind of a back to basics where you want to be able to have a diversified portfolio because nobody can call those big turning points. And you can't be stuck in a handful of stocks that are suddenly going to turn around the wrong way.
And again, she mentioned the Russell 2000 up now by 1%. By the way, you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Again, don't forget, 1:30 p.m. Wall Street time. We've got that interview with James Gorman, CEO of Morgan Stanley. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Let's talk commodities here. I'm pulling up my GLCO Go, Global Commodities Price. I'm looking at the metals. I see kind of a mixed picture. I got, you always talk about gold. Gold's up 8.5% this year. Nickel's up a little bit, but I got some other ones like, I've got nickel down. So anyway, just some movement. Silver's up a little bit. Nickel's down big. I don't know what's going on out there, but our next guest does. Brian Suzarchuk joins us. He is the CEO of Fosterville South Exploration. Brian, thanks so much for joining us here. On the metal side here, again, I've got some positive movements in gold, positive movements in silver. Let's just focus on those two right now. What's driving gold here and silver following up?
I think that you've got gold in this perfect storm scenario right now. Obviously, there's a lot of uncertainty out there geopolitically, socially, economically, and gold tends to do very well, as we all know, over a thousands of year track record when we're in these times of turbulence. And as of late, the talk of the BRICS implementing a gold-backed currency, I think, is starting to bring a few more mainstream eyes on the yellow metal as we go forward.
How do you kind of look at and suss out the eyeballs that gold is getting when you look at that calculation?
Sure. So we're very involved in gold equities, in production, development, exploration, and as such, we're raising money at different times in the year for gold equities. And what we saw a year ago, 2 years ago, was that almost exclusively these financings were being taken down by precious metals funds, by investors in the space, by mining companies themselves corporately, and we saw very little generalist interest. Right now, anecdotally, we're definitely seeing that generalist interest perk up not only in bullion, but in these gold equities. And I think that the narrative out there right now with regards to this currency uncertainty around the world and perhaps a shift towards de-dollarization, this is putting it on some sight screens, and people are out there, generalists are out there kicking the tires a little bit. And remember, this is a small space. So when you have the generalists move even a small amount of allocation into gold equities, it ends up eventually being a whole lot of money chasing very few ideas. And that can really lead to torque among the gold equities.
So, Brian, where are you guys looking for gold these days, or mining gold?
Sure. I was a co-founder and former president of K92 Mining, which is a producer in Papua New Guinea that's gone from a micro cap up towards that $2 billion Canadian market capitalization. Right now, with Fosterville South, we're back in Papua New Guinea. We've just announced a transaction to acquire a very large 2,100 square kilometer land package in Papua New Guinea with some very advanced stage gold assets, as well as some exploration assets. And Papua New Guinea is known as the land of giants in the gold mining business, simply because there have just been so many world-class deposits discovered there in terms of both grade and size. Fosterville South, in fact, based on this transaction, is about to change the name of our company and rebrand. We're going to soon be known as Great Pacific Gold. But right now, we trade on the TSX Venture as FSX, and in the United States as FSXLF.
So I wonder then how you rate something like the UAE's recent deal. The delegation signed a $1.9 billion mining partnership deal with the Congo. Does that play into your calculation about the 2023 outlook for gold?
Absolutely. I think that there's a hunt for commodities on right now. The West is just starting to catch on to this. And we've seen over the past couple of years, central banks around the world accumulating gold in real general terms as countries such as China, such as Russia, India, countries within the Middle East have been accumulating gold. We in the West have been fixated on Bitcoin and different cryptocurrencies and technology situations. And I think all of a sudden we're waking up to the fact that there is this de-dollarization occurring. Gold's going to play a big part of that. But on a broader picture, we also see this hunt for commodities around the world. There is no electrification or decarbonization without copper, for example. Well, the Chinese have been incredibly active in Africa and obviously in other parts of the world, putting together deals to secure copper supply over the coming decades. We're a little bit behind in the West in terms of going out and doing that. But right now, I think it's starting to hit home that we can't have this large scale industrialization, electrification, decarbonization without the essential input metals to make this all happen. And I think what we're seeing, not only in gold, but in things like copper and things like lithium and things like nickel, zinc, we're starting to see this worldwide competition and rush for commodities. And I think we in the West are a little bit behind in that race.
All right, Brian, fascinating stuff. Really appreciate you taking the time. Brian Susarchuk, he is the CEO of Fosterville South Exploration, talking about the mining and the development of precious metals and just base metals around the world, suggesting that the West needs to do a little bit more work here, because going forward, some of those metals are going to be very critical to some of the changes out there in the economy. So good to catch up with Brian. We don't do, I don't think, maybe enough on some of those hard commodities.
Yeah, I was just looking into this purely because we had this interview. Gold rising more than 1% at its highest level since early June as those bond yields fall as well. So it's interesting to look at kind of the interconnected nature of all of these asset classes.
Yep, absolutely. It's good to get a good look at what's happening in the commodity space. S&P 500 here, just going back to our equity story, up about 0.5%, kind of right towards the high of the day. So we will keep an eye on that. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Dan Schwartzman.
Hey, Paul, Visa and MasterCard have been accused of overcharging the Square payment platform, resulting in an antitrust lawsuit. The suit alleges that the so-called interchange fees were inflated so that the two credit card companies could maintain their market power. Block Incorporated, which is the new name of Square, says the inflated fees resulted in higher prices for consumers. It's a big week for earnings reports. Bloomberg's Erica Herskowitz with details.
Second quarter earnings season kicks into high gear this week with dozens of major companies reporting. First up, Bank of America, which turned out more profits and revenue in the second quarter after a surprisingly strong showing from Wall Street and its consumer businesses. Net income jumped 19% from a year ago. Revenue rose 11% to $25.2 billion.
Thanks, Erica. Citing competition from Tesla and General Motors, Ford unexpectedly announcing that it was cutting the price of their electric F-150 pickup truck by as much as 17%. Commercial buyers will now be able to buy an F-150 Lightning Pro for as low as $50,000 for a base model. That's down around $10,000 from previously. Stellantis says they expect a semiconductor shortage to reemerge as demand grows for electric vehicles as geopolitical risk increases. With more and more consumers purchasing electric vehicles, the need for more and more complex chips has increased. The company plans to spend 10 billion euros through 2030 to secure various kinds of semiconductors. Greyhound reporting some good news. The bus company says that ridership increased over the July 4th holiday by 63% from last year. Memorial Day weekend was even better. They had an increase of 70% year over year. Those are the company stories we're following this hour. I'm Dan Schwartzman, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills and Paul Sweeney here in our Bloomberg Interactive Broker studio, and of course streaming on YouTube. Just go to YouTube and search Bloomberg Global News. Kind of the markets kind of sticking in the green here today. Not a lot of volatility intraday, and again, the VIX is still at 13.48. So the VIX showing you not a lot of volatility in this market, but we will stay on course with this market. Right now, let's go to our good friend in New York, Dan Schwartzman, and get an update on world and national news.
Hi, Paul. Former President Trump has been informed by letter from Special Counsel Jack Smith that he is a target of the investigation into efforts to overturn the results of the 2020 presidential election. Trump could be facing yet another indictment, as letters of this nature are usually sent to those facing the prospect of indictment. House Majority Leader Steve Scalise says the timing of this is suspect.
I'm just pointing out that it's interesting that the same week that you have this whistleblower coming forward to testify before 3 different congressional committees, you see, once again, this isn't the only time it's happened. Over and over again, you see different attacks by the Biden administration against President Trump.
Trump was indicted just last month and pled not guilty to 37 criminal counts related to his handling of classified documents. Trump also pled not guilty to a 34-count indictment from the Manhattan Attorney General's office for allegedly falsifying business records in connection to a payment made to porn star Stormy Daniels. A U.S. service member has willingly crossed into North Korea at the demilitarized zone. A U.S. official says that the soldier was being escorted from a South Korean prison after being released and was on his way to Incheon International Airport when he was able to break away and join a tour group of the DMZ. The soldier is said to be in custody in the north. House lawmakers are working through the finer points of the FAA reauthorization bill this week. Bloomberg's Amy Morris has the latest.
The House Rules Committee tacked more than 100 amendments on the bill, and the measure is scheduled to come to the House floor this week. The Office of Management and Budget praised work on the 5-year plan, but pointed out controversies that could complicate its passage, like increasing pilots' retirement age. The White House also says it'll push Congress to require upfront disclosure of add-on fees, and it would require compensation for flight disruptions caused by staff and schedule changes. In Washington, I'm Amy Morris, Bloomberg Radio.
Thanks, Amy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Dan Schwartzman, and this is Bloomberg. Paul, back to you.
All right, Dan, thank you so much. We appreciate it. Madison Mills and Paul Sweeney here. Looking at Microsoft, the shares on Microsoft, all-time high today, up about 5%, $362 a share, up 51% year-to-date, $2.7 trillion market cap. So we're definitely on a $3 trillion market cap watch for Microsoft. What's some of the news out there today, Madeline? Anything's driving this?
Obviously, it's all going back to AI always. Today, they announced that they've got Microsoft 365 Copilot ready to launch. And this is going to be an AI tool that works with their Office software that they already offer. But basically, companies can utilize this software to, have an AI tool to deal with calendar invites, all the other Microsoft Office software that you already have, PowerPoint, etc. My number one question was, why would you not just get someone to chat GPT those tools for free? But it looks like there's going to be a really important element here, which is protection of private corporate data. So that's going to be a key piece of this.
So $30 per user per month,
Yep.
on top of what most businesses' customers already pay.
It's expensive, no?
I don't know. It sounds, to see what they deliver, but I mean, Microsoft 365 Copilot. Anyway, they have about 600 customers, corporate customers, including General Motors and Goodyear. So that's pretty solid. So again, that's just another revenue stream for Microsoft and for a lot of technology companies. I think a lot of investors are just trying to figure out what is AI, number one, and what isn't AI, because I think a lot of people are just throwing that term around pretty loosely. So what is AI? And if I want to invest in the growth of AI, how do I do it? Well, NVIDIA was kind of the poster child there at first when we saw their stock just explode when they really upped their revenue estimate due to AI. But a lot of other people now seeing Microsoft and some others as a way to play it as well. So again, Microsoft stock all-time high. And again, it's just amazing. We kind of thought that this was going to be a slow growth kind of big cap stock, but no, there's lots of levers for growth there. So AI being the latest one. All right, Sound On with Joe Matthew from Washington, D.C. That starts right now.
Waves across the industry. After years of controversy, Ripple's XRP token is deemed not a security, according to a federal judge, when sold to retail investors.
And as U.S. bank earnings roll in, we'll talk with Sergey Nazarov, co-founder of Chainlink, about the growing adoption for blockchain technology in the banking ecosystem.
Plus, while investment in crypto startups has slowed, we'll hear from the co-founder of one VC firm, Coin Fund, which just raised more than $150 million to back early-stage crypto companies.
All right, so all of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function, and what you will find is that it is mostly a down day for digital assets, including Bitcoin, which is trading below $30,000, down about 0.7 or so of a percent today, 7 to 0.8%. Ether is down by about a quarter. A big underperformer today is Solana, down the better part of 4%. But XRP, of course, is the token that continues to be the primary story after Thursday's ruling. Yes, when sold to institutional investors, it might be a security, but for retail players, it is not. That is according to the federal judge ruling that came down just days ago. And since that ruling on Thursday, XRP is up about 60%, gaining about 2% in today's session, Matt.
All right, well, Ripple's victory is being celebrated by the market by trading more of it than any other coin. Here you can see the market share of different coins in trading volume put together by Keiko Trade Data. You can see that, of course, half is the thousands and thousands of altcoins that we don't really even know the names of. Then you've got 8%, which is Ether. 20% is the OG Bitcoin, which typically rules supreme in terms of trading volume for one single coin. But now XRP has overtaken it, which I think is pretty amazing. Bloomberg Intelligence says this decision by the court is among the more important cases for determining regulatory authority over crypto assets. That's a lose for the SEC. Listen to what some of our guests had to say.
The SEC clearly lost as a matter of law.
Is devastating to the SEC.
It sounds like the judge leaned more into sort of Ripple's camp than the SEC's. Unless the arrangement really created some post-sale rights and obligations between the parties, then maybe it's not a security.
This completely eliminates the central thesis of the SEC that they ought to have regulatory authority in this space. They only get regulatory authority over securities.
Last year, I said that we were going to see regulatory clarity first in the courts around the definition of a security, and I think you've seen that with some very big court opinions that have been released.
By and large, very positive for exchanges.
This is a win for Ripple. It's also a win for the entire crypto industry.
Okay, so a win for some, like Brad Garlinghouse, the Ripple CEO, who we were just hearing from. But we've also heard from the loser, really, in this scenario. SEC Chair Gary Gensler. Here's him on this case.
We're pleased from that decision, recognizing the importance of protecting investors on the institutional investors in that, and that the court movement with regard to fair notice. And while disappointed on what they said about retail investors, we're still looking at it and assessing that opinion.
Okay, for more, let's bring in Bloomberg's Olga Karif, who covers this for us. So, Olga, as you mentioned there, this is retail investor specific. So I guess there's a real question around how much the hype around this decision is really deserved, or if we could see things come back to earth when we realize that the SEC is still pursuing litigation against a number of other crypto players.
Absolutely. So a lot of people saw this decision as really good news for a whole bunch of crypto companies that are being pursued by the SEC, particularly exchanges. But what's important to remember here is that this is sort of not the final decision. There will be appeals. And, as one law professor I talked to said, this is not the death blow to the SEC and its authority. This is definitely a setback. But it still remains to be seen what the actual impact of this decision will be on other cases. There's definitely a negative impact on Ripple, which still has to, half of this case is basically proceeding forward because institutional sales to institutional investors are still deemed securities by the judge in this case. And, a lot of experts that we talked to basically say, this was specific to this case. The judge in the Ripple case specifically said that she's not making any conclusions about what this means for the secondary market. So there's still quite a bit of unclarity, but certainly some good news for the crypto space.
It seemed to me, Olga, that the reason the judge deemed Ripple's sales to institutional investors, deemed XRP a security in that event, was that they also sent paperwork that looked like essentially a business plan saying, hey, this is our business. If we all get together and invest in it, we can profit greatly from it. It's not just that they sold these coins to institutional investors, right? It's the whole scenario surrounding that specific sale.
Absolutely, that's exactly right. So the SEC used this so-called Howey test to figure out if something is a security or not. And the judge said that she applied this Howey test very narrowly to just institutional sales, because she said, okay, look, Howey test is about a bunch of investors investing in a common enterprise, expecting to get a profit from the efforts of others. But if you look at retail sales on exchanges, people who buy coins on exchanges, they don't know who is selling the coins. They don't know what is going to happen with the money they're investing in the coins. So she judged that this Howey test does not apply in this case. And so a lot of industry insiders obviously are cheering this decision as very good news for exchanges.
All right, Bloomberg's Olga Karev, thank you so much for breaking things down for us and where things go next. Joining us now to further this conversation is Sergey Nazarov, co-founder of the Web3 services platform Chainlink. Sergey, thank you so much for coming back. It's great to see you again. As we think about this ruling in particular, how do you see it affecting and transforming perhaps the broader crypto industry? Because we've seen it be quite a catalyst. I just wonder if it stays that way.
Sure. Thanks for having me. I think that the amount of clarity that we get next will determine whether large institutions put even larger amounts of value in. I think that this is all a side effect of FTX. And FTX started out trying to lobby and gradually improve the regulatory landscape for crypto startups by lobbying with tens of millions of dollars. Unfortunately, their failure led to the opposite reaction of a very adversarial regulatory environment. But nonetheless, that even adversarial regulatory environment is now accelerating the rate at which you're getting clarity. And I think that clarity, the more you get of it, the more that large banks and institutions become comfortable with sending large amounts of value into the blockchain system. And then with that clarity, they look for technical means to do it, which is what we work on with CCIP and the ability for banks to easily put large amounts of value into their own bank chains and then public chains. And so, generally speaking, just the acceleration of clarity is in and of itself good. The decision is very positive, but the fact that there's more and more clarity so that large value and asset holders can make decisions about putting their value into the blockchain ecosystem is already a big positive.
Yeah, and we've been seeing since the BlackRock ETF filing, we've heard more industry insiders say that they think they're going to have to work with crypto going forward, including Larry Fink of BlackRock. Listen to what Mike Novogratz told us last week.
I think it ends the year higher. We're consolidating, between, call it 28 and 32,000. I think if you take out the top, we'll have a nice leg up. That might be when the Fed actually pivots and flinches. People have made a lot of money, and so there's some supply pressure today. BlackRock, Invesco, the group of ETF providers is a real signal that adoption is coming.
So he's talking about, of course, his expectation for the price of Bitcoin to continue climbing because of that institutional involvement. Do you see this, is it fair to call it a wave, another wave of institutional involvement as well?
I think this will make some institutions on the fringes more likely to move. I don't think this will necessarily make all the largest banks or the most conservative asset managers move. But the thing that is making them move is the demand from their clients, from their customer base. So their customer base is continuing to demand access to crypto assets and even more advanced assets like real-world asset tokens. And that is really continuing to drive their adoption, regardless of whether it's a crypto up market or a crypto down market. And that's the first time that I've seen that in the many years that I've been in this industry since 2010. Usually banks coincide their interest with whether the crypto market is up or down. Now, for the first time, I'm actually seeing banks continue to invest in large technology projects like making their own bank chains, connecting those chains with CCIP, and doing other important things like issuing real-world asset tokens, because the client-side demand is still there. So I think what this will do is it'll make it more likely that there's more client-side demand, which will have a delayed effect, but it will drive banks to invest even more in blockchains because the clients will now be more comfortable with getting crypto assets, which fundamentally has been driving the banks to do more.
Okay, so you've mentioned CCIP a few times now. That's your cross-chain interoperability protocol, which just launched. This is basically a DeFi, TradFi connection. That's the aim here?
It's a messaging protocol that connects all blockchains into a single internet of contracts. So similarly to how the internet we all know and use is made possible by something called TCP/IP, which is a messaging and communication system that connects all the different internets of the world into one internet. You can view different blockchains as separate internets that need to get connected into one internet of contracts. And CCIP does that for both bank chains and public chains. And in connecting the bank chains and the public chains, and then connecting them together, you basically get a huge amount of value flowing from the banks into the public blockchain world, which is why I feel that the value of our industry can rapidly increase and easily go well past 10 trillion based on all the value and assets that banks are putting on chain now.
I know you're also working with Citi as well as Bank of New York Mellon and some other industry players on that. So very interesting stuff with CCIP. Chainlink Sergey Nazarov talking to us about developments in the industry. Really appreciate your time, Sergey. Thanks so much. Hope you come back soon. Coming up, Alex Felix joins us from the crypto venture firm Coin Fund to talk about the more than $150 million they've raised to invest in early stage crypto companies. Very interesting stuff.
Plus, we'll get Kathy Wood's take on the SEC Ripple court ruling and what it means for Coinbase. That's coming up.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think the funding is happening. And what's great about what's the entrepreneurs that are working on things right now is that what we call the entrepreneurial tourists have left. And now it's the true entrepreneurs that are working on building out the Bitcoin ecosystem, building out new forms of smart contracts. I suspect that in the next year or two, you're going to see some really great changes. Where we are in the early stage venture capital business, it's really an exciting time.
That was VC investor Tim Draper talking about funding in the crypto space. Of course, he's heavily involved. And our next guest shares Draper's enthusiasm after raising a $158 million fund to back early stage crypto startups. I'm pleased to say CoinFund CIO and co-founder Alex Felix joins us now here on set. Alex, thanks so much for coming in. We talk so much about the drop in funding for crypto since the collapse of FTX and others, but some, like Tim and you guys, are really still at it. How do you find fundraising to be right now?
Well, we're among the first Web3 investors in the space, and we've been thoughtfully and methodically.
Because you've been doing this for a decade.
Been doing it for a long time.
Yeah.
So we understand the pitfalls. We've navigated a lot of the treacherous, things that have happened, and really, the celebration of our 8th year in business also comes with the fundraising news and the fact that during this downturn and bear market, we've raised $550 million from sophisticated investors across all our strategies. So we're really seeing the market consolidate around people who have been building out platforms, investing, and preparing for that next stage of growth.
So how have your previous funds done? I mean, a lot of people think of crypto from like November 2021 to now, but obviously there was a massive run up from the get-go. How does it look historically when you turn around and glance back?
Yeah, Bitcoin during our time in business, Bitcoin's had 4 major cycles, and we've seen more than 80% drawdowns in almost every one of those, peak to trough. But we have navigated things exceptionally well. We take a long-term view, we look out over the horizon, and starting the firm in 2015 has positioned us to deliver exceptional results to our partners, and unfortunately can't share the details, but we've done tremendously and really look forward to continuing to deliver repeatable returns and back this champion this next wave of builders building the new internet.
Well, what kind of builders are you interested in? As you talk, Alex, about looking out over the horizon, what opportunities excite you? Where are you going to put this money to work?
Yes, we've really focused on some of the established categories. These are some of the subsectors that have a track record of building $5 or $10 billion companies. That's Web3 infrastructure, that's DeFi and CeFi, and that's NFTs and gaming. And then we're really looking at the emerging sectors, and this is where our early seed funds focus. That's the intersection of crypto and AI. That's really DAOs and technology intermediation, as well as really thinking about the consumer adoption, which we still forecast is more than 3 years out.
I'm glad you brought up AI, Alex, because that was going to be my next question. Where you see the interplay of AI and crypto really taking shape? What kind of companies are going to be able to best utilize AI and develop it going forward?
Well, I think AI has a trust problem. We're, again, consolidating a lot of data around some of the really big platforms that exist today. And every consumer in the world is really feeding that engine. Now, where crypto is exceptionally powerful is in coordination and verification. So we really think about the AI data pipeline as a process of consolidating information from consumers, really thinking about how to model and use that and tag it and coordinate it. And then obviously the sort of inference and the outputs. But if we're going to talk about machine-based services and you're not having, those things verified coming out of these models, and these models aren't open, then it's going to be really hard to see, AI's true potential. So we actually think that crypto needs AI. AI needs crypto more than crypto needs AI.
Let me ask you about consumer adoption. You think it's going to be more than 3 years out. In the last few weeks, I've had so many sort of very involved guests talk about Lightning, and I had a chance to speak with Jack Mallers last year. How do you think consumer adoption is going to look?
I think that digital payments and digital cash are a really interesting primitive. We just went through a number of collapses where people did not have access to their money. Silicon Valley Bank, a number of the other regional banks, many companies were left hanging out to dry. And even software-based systems that are built on top of some of these banks that try to deliver to tens of millions of employees could not deliver on that Monday if the government hadn't stepped in. So I think that digital cash, once there's some safe sort of regulation wrapped around it, and this is where we're really pressing on the regulators to say, hey, let's support responsible innovation, let's educate, and let's move forward, because digital cash is going to be a major use case, and there's only 200 billion or so outstanding tokenized dollars today. I think that 5 to 10x's once we get some clarity on how you can create digital cash.
Yeah, that's a conversation we continue to have here in Washington when it comes to regulation. CoinFund's Alex Felix, thank you very much for joining us, and congrats again on the raise. Coming up, we'll turn to Kathy Wood, who says she's bullish on Coinbase, but 3 of her ARK ETFs just sold shares of the crypto exchange. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
3 prime ministers, 4 chancellors, an energy crisis, and the soaring cost of living. It's been a hard year for startups, but even in the toughest times, some of the best ideas are born here in the UK. Bloomberg UK's Startups to Watch will profile the brightest companies under 10 years old, with the winners unveiled at the Bloomberg Technology Summit in London in October. Get your entry in by the 7th of August for the chance to have your company profiled and to attend unique networking events. Good luck, and we hope to see you there.
This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Matt Miller in New York. Well, Kathy Wood's ARK Invest sold 127,000 shares of Coinbase yesterday. Yesterday, Wood also spoke with Bloomberg about how last week's Ripple ruling and its impact on exchanges, particularly Coinbase, would be a positive one. Take a listen.
We are very positive on Coinbase, especially in light of the court ruling for Ripple and against the SEC. Not all together, there were some puts and takes, but by and large, very positive for exchanges. And so we're very optimistic. The stock has had a significant move. Remember in March, and I think in June, we were looking at Wells notice and an SEC suit, which really hammered the stock, but did not take it to new lows. And you saw we bought at those levels. And so as the stock has escalated to the top of, it's the second largest after Tesla now in the flagship strategy, and it's the largest in ARKF, our fintech strategy.
And Matt, on the subject of Coinbase, we'll also be monitoring tomorrow when the CEO of the company, Brian Armstrong, is going to be on Capitol Hill meeting with House Democrats about crypto regulation. He's, of course, been pushing for legislation. Our colleague here in D.C., Tyler Kendall, scooped that he'd be on the Hill yesterday. But it just goes to show you that there is still a push, even if you have this regulatory victory on the one hand, for Congress to actually do something to set things in stone.
Yes, and if I'm not mistaken, that's behind closed doors, right? So we won't be able to see those discussions, but maybe there will be someone around to doorstep him in the Capitol?
Yeah, or he'll tweet about it, or, you know.
Or he'll tweet about it. All right, that does it for Bloomberg Crypto. Stay with us as you'll hear next from the CEO of Morgan Stanley. James Gorman joins us fresh off the bank's earnings. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
News breaks. No one covers the world like Bloomberg.
The word here continues to be, let's stand with Ukraine, quote, support Ukraine so they can win militarily and obtain their objectives on the battlefield.
For Taiwanese stocks in the first half, 30% up from the lows that we saw last year. It's really been driven by this whole AI sort of trade here.
The $69 billion deal was the biggest video games deal, but it's also pretty much the biggest technology M&A. Makes it pretty exciting here.
Bloomberg, your global business authority.
I'm Amber Canwar in for John Ehrlichman. Welcome to Bloomberg Markets.
And I'm Matt Miller. Let's get a quick check on what's going on in the markets right now. We are looking at the S&P 500 near a session high as bank earnings, let's flip up the boards because I've got it over here. Bank earnings push up the benchmark index. Right now looking at S&P 4546. There you go. And we're looking at also investors buying bonds right now. That pushes down the yield across the curve. Really, you can see on the 10-year right now, the yield is off about 3 basis points at 37,794. We're looking at the Bloomberg Dollar Index coming back another day. You know, last week we had a string of losses for the Bloomberg Dollar Index, pushing it down to 1,200. We're barely above that right now at 1203.5. And oil climbing back up again. Right now, NYMEX crude is up $1.70 at 75.85. So we're seeing some support for the commodity. Amber, what are you watching?
All right, well, the Dow is up 300 points. United Health is about half of that rally, getting an upgrade from Bernstein, saying this is a valuation opportunity to buy a company that is relatively attractive, that's still got long growth potential. On the S&P, Carnival Cruise is benefiting from an upgrade from the folks over at Argus Research. And then under the hood as a sector, those bank stocks are continuing to be embraced by investors, despite not necessarily a perfect set of results, but certainly ones that are good enough for investors today, Matt.
Yeah, absolutely. I mean, Morgan Stanley, one of those bank stocks that's jumped today. Here you can see the provisions set aside for credit losses are much higher than they were a year ago, and the trend is up. But the CEO, James Gorman, said on the earnings call earlier that the trend in terms of trading right now is promising. And I think that's one of the things, besides the revenue beat, that has investors out in the market buying those shares, pushing them up. I saw them up at one point more than 5%. So strong acceptance on Wall Street of those earnings. And right now, we're going to hear from Bloomberg's Sonali Basak. She's going to speak with the CEO, James Gorman. Sonali?
Thank you and welcome to our Bloomberg television and radio audiences. I'm standing by at Morgan Stanley's headquarters with Morgan Stanley CEO and Chairman James Gorman. It's been a blockbuster earnings reaction for you, but also a pivotal moment in Morgan Stanley's history, with you announcing that you would step down into next year sometime. How did you know that this was the right time for you?
Well, firstly, Sonali, thanks for coming over. 14 years is it's a long time to do anything, and to run a global bank and deal with all the changes that are going on in the world. You know, it's important for organizations to refresh. So I think it's certainly a very long time to be a bank CEO, and everybody's got to find their own agenda. My focus is on ensuring that this place does well over the next 10 and 20 years. To do that, you need to give the next generation a chance. And they will do things differently, and they will grow the place in a way that I might not have imagined. So it's exciting. It feels right.
What criteria is the board using to choose a new CEO? I mean, it's a big open question on who might take over next. You've said there are 3 candidates. How do we think about who the next person is?
Well, I think you look at a whole range of criteria. The first and obvious one is, are they good at running businesses? And you know, when I took over the job, I was actually running the smallest and worst performing part of the company, but we were turning it around. So the board wants to know they're good business leaders. But the other are qualities which every institution, be it educational, government, or not-for-profit, or public companies, look for in leaders. It's character, it's endurance, resilience, strategic sense, communication skills, all the obvious stuff that you'd expect. And fortunately, we've got 3 fabulous candidates. They're all internal, and they all have great business skills. And now the board has, you know, the opportunity to figure out who's the best to lead Morgan Stanley for the years ahead, the Morgan Stanley that we're going to become. So I think they can all do it.
If you think about just how much Morgan Stanley has changed and the investments you've made in wealth management, investment management, and frankly, the idea here that the profitability of the wealth manager is just through the roof, and frankly, a lot more than you're seeing even in institutional securities, does it make more sense for the future leader to come from some of those growth areas?
Well, I'm not going to get into speculating, which is, you know, what I'm sure you'd like me to do. But the board doesn't look so much at how a specific business is performing. They look at, again, the enduring qualities of the leader and whether they have the kinds of skills you need to lead a complex global institution. And as I said, all three of the people we have internally are terrifically well equipped. They're great people. They have great respect for each other. They have terrific values. So, you know, we've got, it's an embarrassment of riches is all I'll say.
How do you focus on culture during this transition? How do you ensure that whoever doesn't get the job stays on board? Is that something you worry about?
Not really. No, I think, you know, we've worked together for, I think with this team, plus the other senior leadership, people like Sharon Yeshaya, our CFO is on the call, Eric Grossman, our Chief Legal Officer, Carol Vincent Green, who runs internal audit. We've had a very significant leadership team working closely together for a long period of time. What matters about culture is you share the same values, and we share the same values. There won't be the drama that people perhaps look for in succession around this particular one, I'm convinced. I think it will be relatively seamless, and I think it will lead to a great outcome.
Now, we have to talk about the numbers here because wealth management.
Sure.
$200 billion in net new money for the first half of the year, and it's quite breathtaking. It's certainly nothing to cry about here. How much of this is a function of the dislocations in the market, the business that you've taken on from First Republic or Silicon Valley Bank?
I would think, I don't know exactly, but my guess is less than 10% related to that. So 90% related to just the change in the business model that we've put in place over the last, 15 years. And that business now led by Andy Saperstein have figured out a variety of ways to grow client activity, whether it's through direct, through the E-Trade platform, and the digital bank, whether it's through the workplace, which we did first with Solium, the acquisition, then the E-Trade workplace, the advisor-led channel. We've had very low turnover of advisors, and we still seem to be the place of choice for many of our competitors, financial advisors. So the beauty of it is it's no one single thing. This quarter, it was a bit more advisor-driven than it was last quarter. But all of them are contributing. That's why I think it's going to endure.
When you look at the stock price, on my way over here, it was up more than 7%. You're on track to have the best performance in trading right after an earnings release in your tenure, certainly, if not history here. So what do you think investors are latching onto when they look at today's numbers?
I think I should retire right today, isn't it? Isn't this the moment where you drop the mic or something?
Well, then who's the new CEO?
Yeah, I know. Well, that's not going to happen. Nice try, though. No, listen, we had some big movements in the stock when it was very low back in 12 and 14 and 16, 2012, 14, 16. No, but today's big, but it's just reflective of the fundamentals are really strong. Our capital ratios, I mean, we'll see when all the banks report. We're close to the end of the major banks. But I'm pretty sure we've got the highest capital levels of any bank, any major bank in the U.S. The net new money numbers you referenced are obviously evidence of growth, and our dividend is 4% or close to it. So a combination of really high conservative capital levels, obvious organic growth within a couple of core businesses, and very high dividend yield for what we do. I think the investors sensibly look past what's been going on in the market recently. IPO activity is obviously down, M&A activity is down, some of the fixed income trading was a little more muted. None of that matters, right? Strategically, that doesn't matter. That's a point in time market sentiment. That will change. Deals will get done. Companies will go public. People will trade. So I think the market sensibly looked at the big picture items and said, yeah, the rest of the stuff will just come, and that's why we're trading the way we're trading. It was a great, clean quarter.
When you look at investment banking, trading, advisory, when do they come back, and how robust will that activity be?
Well, I don't know when exactly. I do believe it's bottomed. And we were just talking before we got on air, I've been to, in the last couple of months, Australia, Japan, Saudi, France, England, Amsterdam, and all over the US. And every CEO I'm talking to has tilted to a more forward-looking posture. So I think deals will start getting done. Whether they happen in the back half of this year, I'm not so sure. It might be next year that it comes, but it will be during next year when we see it, if not this year.
James, what does all of this mean for headcount? You've booked a more than $300 million cost tied to severance packages, but it seems like headcount is starting to stabilize. Do you think that a rebound in some of this activity means that you could bring more people on, or do you still see more cuts in certain areas?
Not really. I mean, we laid off about 1,800 people last December, and we knew that was an optimistic view. And I said to the team, if by April things haven't turned, we'll have to unfortunately do it again. And we ended up laying off another 3,500 people. Now, against that backdrop, we've had attrition, I think, is running almost 50% what historical rates are. We've got 83,000 employees. We bought 2 huge companies, E-Trade and Eaton Vance, and we guaranteed everybody their job during COVID. So headcount was, if you will, artificially high. I regarded this as bringing us back to what the normal run rate should be. I don't think we're going to add to that. I mean, one of the beauties of this business, it's very scale-driven. If you do a few more trades, you don't need more people to do it for the same clients. So, no, I think we're about right with headcount right now. But obviously, you know, we've got fiduciary responsibility. Shareholders deliver returns, and we watch that carefully.
You know, your views sound fairly rosy. I mean, it sounds like you are pretty sanguine about the direction of travel here across different business lines. Earlier this week, Secretary of Treasury Yellen had told us that she believes that there might not be a recession. Do you agree with that view?
Well, I've said publicly for over a year, I thought the probability of recession was low. And if we have one, the magnitude is likely to be relatively modest. So I've been sort of between probability low. So likely we don't have a recession. And if we do, it's not going to matter that much. And I think things are playing out that way. I mean, Chairman Powell said it, you know, it is possible to have soft landings, right? It's been done, I think, 6 of the last 11 rate increase periods. I believe I'm right in saying that. There have been soft landings. So it's not a given you have a recession. With unemployment where it is, inflation now coming down under 4%, unemployment still under 4%, decent economic growth, stable markets, the banking system, balance sheets are strong, and consumer balance sheets are okay. That's a pretty good backdrop. Now, some industry sectors obviously hurting more than others, but you're seeing it in the earnings this quarter. The earnings are not really bad. They're not great, but they're not disappointing.
So then what keeps you up at night? To the extent that anything can derail kind of this progress in the economy, what would it be?
I mean, the real macro issue, if you step back from it, is the China-US relationship. The GDP of those two countries, I think, is 40% of the global GDP. They're very dependent. We're very dependent on China. China is more dependent on the rest of the world, frankly, for trade. So that's sort of the tipping point. I mean, there's an existential one, which is the U.S. defaulting on its debt. That didn't happen. It's insane that we should even be having these discussions, but thankfully they got through the charade again. But what really matters is U.S.-China geopolitical relationships for global trade and economic expansion. And within that, you know, you've seen Secretary Blinken and now Secretary Yellen in the last month both going there. We're getting to a more constructive tone. So, you know, but Shanelli, honestly, after all the years of doing this, I don't worry a lot at night. I mean, stuff happens and you deal with it. You have a strategy which is designed to carry the company forward for a decade or more, and you accept the inevitable disappointments along the way or the things that go wrong, and that's just part of being in a leadership job.
Speaking of the next 10 years, there is something around the corner that has the potential to impact some of the biggest businesses you have, and that is that Basel III endgame.
Sure.
New regulations in the United States and across the globe that are targeting now fee-based businesses, which has become a big part of your business, as well as trading businesses. How do you expect those rules to eventually impact the returns on those businesses?
Yeah. Well, firstly, and I'll try not to get too weedy, but the rule hasn't been proposed yet. We've had Basel I, Basel II, Basel III, as I joke. Finally, we're at the end because they're now calling it Basel III Endgame. So I guess we're not going to get 4 and 5. Europe has not even caught up and complied with its own Basel rules. The U.S. has had a system parallel to Basel called CCAR, and all of the banks have come through CCAR this cycle very well. So based upon Vice Chair Barr's speech, clearly they're going ahead with a holistic, so they look at CCAR and Basel review. That will be proposed in a couple of weeks. I expect it to be pretty challenging for the banking system at first blush. But if you read the speech by the Vice Chair and various other commentary, it is clear that they want input and they're going to need input. there are things that were proposed under the European system that I just don't think are appropriate for the US system, like, as you said, changing the way they measure operating risk, RWAs, risk-weighted assets, based on the fee businesses you have. That's completely intellectually counterintuitive to what you want in fee-based businesses, which is stability. So I don't see why the US financial system should be dictated by the European regulators, and I just don't see that's where it's going to end up. I think there'll be a lot of discussion, and my guess is none of this gets implemented before the end of 2026. So several years to adjust. And we carry currently a 260 basis point capital buffer. Our CET1 ratio this quarter was 15.5%. Our requirement under CCAR was 12.9%. So we are very conservatively positioned in anticipation whatever changes may happen. But again, Shanali, the key is they're going to happen over years. This isn't going to be tomorrow.
But the changes that would happen would still be under a new regime at Morgan Stanley, would be under a new executive. Do you think that
I hope so.
The bank will have to make changes around its business lines if these rules were to be as stringent as they seem
No, I don't think so. No. It won't change our strategy. I mean, we'd make adjustments on RWAs and parts of the business, but no, it's manageable. It's just I'm separating is it manageable from is it the right thing to do? And I don't think the U.S. economy is what matters here. And for the U.S. economy to thrive, we need a strong banking system led by the largest banks in the country. And we should determine what is the right capital structure for our banks, not have it determined by some other body outside of this country in the national interest. We should do it.
That old saying that if you squeeze Wall Street like a sponge, the activity will move elsewhere. And a lot of your rivals have said that they're very concerned about the activity moving outside of the banking system into the non-banks. Do you share that concern? And what are the risks that are emerging that are maybe going unnoticed?
Well, there's always, if you pressure the regulatory part of the industry, it will move to the non-regulated part because they don't have the same capital charges that we have. So yes, that is a real risk. And in fact, and again, not to get too weedy, but something called the supplemental leverage ratio, which simply takes the amount of capital you have and the size of your balance sheet, basically hurts you for carrying a large balance sheet, even if it's all treasuries. And you participate in the treasuries market to provide liquidity to the broader financial system. So yes, there are consequences from decisions, and that's why the regulators sensibly have asked for and will ask for a very long comment period. And they'll get vigorous comment from me and from others. I'm quite firm on this. We don't need a complete redo of the capital system here, and we'll make the case as to why that's so.
James, what about you? What does life after Morgan Stanley look for you? Do you think you'll stay in financial services or consider a career somewhere else, perhaps politics?
No, I'm very happy with my life. It's, my focus is on handing it over to my successor and making sure they have what I described as the cleanest plate possible. So as many of we have a few remaining issues that I want to work through and get those cleaned up, and probably based on my experience, I can handle some of this stuff more easily than somebody starting day one. And after that, I don't know. I'm Australian. I'll spend a little more time with my family there. I'll obviously keep working in some capacity, and I'll teach a little bit. And who knows? The beauty of life is there are a lot of things to do. So I'm embracing that and enthusiastic about it.
James, thank you for your time. That is James Gorman, the CEO and Chairman of Morgan Stanley.
All right, Shanali Basak, thanks very much for that excellent interview with Morgan Stanley CEO James Gorman. He says he thinks investment banking activity has bottomed. It may not come back until 2024, but it's coming. And the shares are outperforming today. They're up 6% on a daily basis. But I thought to look back at Morgan Stanley over the last 5 years. If you type up any equity on the Bloomberg terminal with the comp function, you'll see a 5-year view. And I put in Morgan Stanley's rivals on Wall Street. You've got JP Morgan, Goldman Sachs, Wells Fargo, Bank of America, Citi, and you can see that Morgan Stanley here, as the white line, has outperformed all of the big Wall Street rivals over a 5-year period. So over the longer run, they're doing much better than any of the other banks so far over the last 5 years. I thought it was just very interesting, Amber, that they continue to outperform.
It absolutely is. They had a message 5 years ago, even going back before, we're going to focus on wealth management, and they delivered. And this is an interesting setup for Goldman Sachs going tomorrow, because we have gotten disparate views of what the capital markets look like. Morgan Stanley and Bank of America today offering very different pictures. So it'll be interesting what this means for Goldman come tomorrow. Another stock that we're watching is shares of Microsoft. They're sitting atop a record high after unveiling new pricing strategy for their AI offerings. They're also nearing the finish line when it comes to that big Activision deal. More on what this means for the stock when we come back. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Markets. I'm Amber Canmore with Matt Miller. Time now for Stock of the Hour. Microsoft is trading at an all-time high today as the company announces pricing plans for its commercial AI software. Microsoft is also restructuring its $69 billion acquisition of Activision Blizzard. Today was the original deadline for the deal to go through, but the company needs to do more to ease government concerns. Matt?
They're definitely pushing ahead with that deal, which looked kind of dead in the water a couple of months ago. And they're also bringing out pricing for an AI product that's going to go to corporate clients, and as well as a deal with Meta that's got a lot of attention in the market today. Let's bring in Tyler Radke to talk about all this. He's the co-head of the U.S. software group over at Citigroup. Tyler, what a time to be a holder of Microsoft shares. The stock has just performed phenomenally. Would it do as well without the developments, the positive developments in the Activision Blizzard takeover saga? Does it really matter that much to shareholders?
Yeah, so it's kind of hard to say this out loud, but the largest deal in Microsoft's history almost doesn't matter. We think that the big driver of this stock has been their opportunity around generative AI, right? You saw a lot of amazing new product announcements, new pricing, specifically on Copilot today.